in. All right, so that risk management is very key. So when we got here now, okay, the same position where the traders occurred before, as you can see, is where I picked that trade. So putting all those things together, I will probably write the list down for you again for you to be able to understand. We give you a sense of belonging in this market. So you understand your area where you are looking for. The next thing that I then do is this, and what keeps me in this trade. It's such a very rocky ride, all right? And I'm not going to say that maybe this is going to go up forever, right? Because as you can see on the 4-hour chart, although we have a very huge impulsive move, we reverse the whole length of that move, all right? After reversing the whole length of the move, what tended to get me in this trade was my 30-minute chart. As we open on that day, we open with a gap. Okay, on that particular week, we open with a gap. I think that was the gap, most probably. I think that was the gap. And then we gap down, we open, and then the price drive up. Okay. And I believe the price then, what day was this? This is the 10th and we are on the 15th, right? The price did its own retracement back down to this area of low, all right? And this area of low constitutes to that previous area of low that we've seen in the market before, okay? When you're waiting for areas like this, you're gonna have to have that kind of patience to know that, okay, this is what I'm targeting, this is my location, what other things will keep me in this trade. When I start to see the significance of the low, number one, it's over here. If price comes back to that significant area and I have my 2 or 3 confluences over here, I believe we have about 3 confluences. The previous weekly low was there. One of the previous daily low was in that area as well, which are these 2 lines, 65.39 and obviously to 65.32, about 7 pips range was in this particular area, and that would have been the area that I'm looking at and targeting, and then take the trade based on what has happened over there before. So understanding all this low and understanding all these areas of high, the significant area, you know, they are very, very important in your trading career going on. If you want to catch some very good trade, especially somewhere where the action has happened before. When you are looking at a new area, it can be a little bit challenging, but because it has happened there before, and you are possibly just expecting possibility of price revisiting that zone, then you plan your trade according to that zone. You've had a rejection there before. Price will not just continue to move in a straight line. And this is what you witness over here. This trade was a challenging trade, but you're gonna have to have a bit of focus at the back of your trade. Then once we start to have the first push up, the first impulsive move up, and we have all this retracement, right? If you have a proper risk management at the back of your trade, you won't be scared. It doesn't really matter if you are taking 0.01 lots, right? Don't watch the people who are taking the one standard lot. If you're taking a one standard, right, obviously most probably you have an account balance which can take that. If you only have a $100 account, there's nothing wrong in your learning phase and taking that little lot. Nothing wrong. Just remember that in as much as you can keep that money and you are not losing it, you're still doing something right. The days of having extensive amount of money to be able to capitalize on and then develop your skill are definitely coming. But in the beginner stage, which is the reason why most people are learning, then obviously you just have to be able to minimize your risk, you know. And once I start to see this structure, I saw this first low, I saw this second low, right? I did not take another trade. I didn't get to take another trade on this second low because I wasn't in the market, right? I wasn't in the market at that point in time. So this would have been an adjusted low, but this third low, which is somewhere around there, right, I add another entry in this area. And the only reason why I could possibly have another entry in this area is because of the structure, the price going up, coming back to this area. You know, if you've and I've had this particular channel trend line or uptrend line in the market way before tracking this low, you know. So, but over here, there was a challenge, right? And the challenge is the price breaks the channel low, okay? A lot of people will be panicking over here, but for the mere fact that the price break the channel low, I ask myself a particular question, and this is the question that I keep asking myself, all right? When I look at this structure over here, the price make this particular low, which is somewhere here, okay? And this is how I'll start to read the behavior of traders in this market. So we go back to this low and then we push high, right? As high as we push, we touch the eye of the structure. And then obviously when you're looking at a smaller time frame support and resistance area, right? For people who love to trade the support and resistance, obviously you can see over here, there's those supports there, okay? But when price breaks this area of support, right, on a 4 hour, on a 30-minute time frame or whatever, a lot of people will be panicking, okay? And then obviously they'll be thinking this is a change of direction, which it can possibly be, and price is coming back down to the lower side, especially when we've broken this area. And this is the reason why I keep showing you that there's a lot of mass psychology at the back of support and resistance, right? So if you're, and this is what causes disappointment, it's either you want to be able to anticipate, right, and look ahead before time, that okay, there is every possibility that this area can be broken or not. If you want to stick to this is the only zone that I'm going to be looking at, then your trading will have its own challenge in its own way at the same time as well. So you cannot just expect or bank on the fact that that area is not going to be broken. So we break it and then eventually we trade back above it. How do you mitigate against this challenge? That is another thing that a lot of traders face. That's another thing that a lot of traders face. And that's the reason why we have some other tools that we employ for the students who have been taking the mentoring session on the market profile. They will be able to understand better. And for you who just use the naked price, you will be seeing it times and times over again, how some of these support and resistance area we got broken, and then they can lead you to make an irrational decision. They can lead you to make an irrational decision. So that occur over there. So when we come here again, the same pattern, right? So we have support, resistance over there, right? And this is very challenging because that support and resistance got broken impulsively. Do we have the same thing over here? It got broken impulsively at the same time as well, right? And then after that impulsive break, definitely you'll be expecting possible correction and then continuation to the downside. All right, continuation to the downside will be the next key thing that you'll be expecting. But when you start to have improved reference points on your chart, right? After that break, the next thing you are considering is, okay, if the price is literally going to stop on this trend line as it has stopped before, right? Then this is the area where that price is going to stop. But can the price find a reason to go below it? Definitely. Where will the price go if it's finding a reason to go below it? The previous area where the price has rejected before in one way or the other is where the price will go to go and look for more buyers, because the price always like to go and test whether there's more sellers below a particular reference point or whether there's more buyers below a particular reference point. And this is the key reason why I use this previous daily high, previous weekly high, and previous monthly high area for my reference point, because I know that the key thing that price want to do is, okay, there's this particular location where we stopped yesterday. We want to go and check whether there's more business to do in that particular area, whether there's going to be more sellers below that area, or whether there's going to be more buyers in that particular area. So if the price is not respecting one thing, definitely the price will be looking to respect another. So if you want to take a sell at the back of the break of this, then you are looking at the risk reward. Okay, I'm taking a sell into a particular zone where we have a reference point. All right. And this particular reference point, obviously, is a key tool for me to add into my trade, because I can easily see the possibility of where the price is going to stop. I can easily see the possibility of where the price is going to stop, and then I can make an informed decision at the back of that as well. So when the price is breaking down, the key thing is, where is the price coming from? So the first touch over here, we push back down, right? We rise up straight forward from that particular low, and then push back up. All right. This pattern that we are seeing over here, it can be a yield reversal pattern, but in as much as the price is still respecting the channel, that has got nothing to do with me. I'm not going to be looking at it as a very yield reversal pattern, right? I'll be looking at it and be monitoring it for continuation until we have that huge break. So if we are seeing the break of this trend line, right, at the back of us not even pushing up to the eye of the channel, right, then I'll be considering, okay, we come to the channel, I'm expecting us to be a buyer, right? If the risk and reward for where we're going to stop is very low, which is you're considering from here to here, about 27 pips, okay? At the back of a huge, where are we coming from? Huge double bottom, all right? This would have been a double bottom pattern, and a lot of people will be looking for the target of this trade. It's just a belief. There is nothing more than that. A lot of people will be looking for the target of this double bottom pattern to be almost at this high, all right, which is about 603 pips. And this is what I'm talking about. Once I have that objective at the back of my mind, right, that this is going to be the huge target of a double bottom pattern, right, then I'll be able to say, if I enter the trade at the right location, at a very good location, right, by understanding what is an hammer on a weekly chart, and price is giving me this. This is what we were seeing. Let me look for another usual. Because you need to be able to tally all these little things together. That's gonna be what's gonna form the bigger picture going forward. I'll go back to that weekly chart again. So on this week, that's the reason why I keep saying you're gonna have to improve your game. I talked to you about the 36 CMA, right? Which is going to be a retracement area where I'm going to be looking for possibility of the buyers coming in, especially when you are seeing them on a higher time frame. So when you now imagine how many currency pairs we can look for 36 EMA on the higher time frame, then you start to see what the idea is going to be like. So at the area of 36 EMA, it does not have to be to the exact. You're just using the moving average to understand what the average is like. What do we have? We have a very huge reversal candle, okay? This way comes back, trade back to that particular area, reverse the whole of the things that has done, but we are still in that area. So when you are looking at your 36 EMA and you are looking at other things to back it up, which are going to be all those areas that you are looking to back it up, you can't exactly say that, right, this is going to be a positive trade, but this is giving you a much more huge potential for the trade to be positive, because now you have the support, now you have the 36 EMA in the same area, now you have the previous resistance in the same area. So you are seeing things in a much more different perspective, and you are tallying them together such that when price comes back to that particular area of low, which we've seen before, especially on weekly, and gives us that large wick, right? You are capitalizing on that, and you can check that on many pairs as well. So let's look at Euro Yen quickly. So this is not giving us any type of retracement. Look at that 36 EMA over there, right? So it's now up to you to tally that with advising anything in that area before, you know. So that is making that your 36 EMA much stronger. If you can tally it with, Fibonacci, is making it much stronger. If you can tally it with the trend line, it's making it much stronger. So Euro GBP on weekly at the same time as well. Another retracement back to 36 EMA, that huge push comes at the back of it. And look at so many opportunities that this offer at the low of the weekly, lows of your weekly in the same particular area will be giving you those huge momentous trades. So when you are looking for where to pick those trades that can last you I hope you're paying attention that you can stay in for a very long time. These are the kind of tools that you'll be putting together to look for those trades. So Euro, New Zealand, everything is coming back to almost that same area, that 60 MA, right? So now you can see the reason why we have that Euro not net long position, because most of those Europeans are attaining this key region, Euro, New Zealand, and we look for Euro card as well. So it is not a coincidence. In this case, this didn't get there. But yeah, obviously, all the net long in Euro is helping to push some of the other Europeans as well. So in that area as well, so many weeks, so many selling weeks in that area, weekly weeks, you know. So this is teaching you and showing you where your location is going to be. Which other one haven't we checked? So Euro USD. Let me delete that for a second. So for Euro USD, we are not at the bottom 36 EMA. This is just showing us that the pressure of the dollar is significantly strong against the euro. But what can we see in this area? You know, when I start to see a lot of weekly wicks in the same area, right? Those wicks, that week falling in that area, that wicks falling in that area, that week falling in that area, those are buying wicks, right? This is showing me that a lot of buying is coming in this area where I'm seeing this week. That's the reason why the price is pushing up higher. Although it's on the weekly, you might not be able to see it clearly, but I mean, once you start to see so many weeks in the same area, it's telling you the same story over and over again. The weeks will never tell you a lie. The only reason why a week occur over here is because some traders come in to take advantage of the low prices and push the price up. The only reason why we stop selling down here is because some trader comes in, right, and buy this aggressively and push price down up. When this price push down, right, some traders come in and see this as an opportune price to push price back up. So you're seeing the same action of trader in this area where the weeks are doing what? Where the weeks are combining themselves together in the market. So this is on weekly. These are the kind of things that you look for on weekly charts. You know, is what the opportunity that's presenting is showing us. That's what we're going to base our judgment on. So if I go back to that Euro Aussie chart, that is the same thing. That's 60 MA, 60 MA, and then obviously the low in that particular area give me a sense of belonging to continue to look at my chart and say to myself, I want to take that trade. And I took that trade, and it's still currently going, as you can see, on 289 pips. So bear all those things in mind. 36 EMA, those weekly wicks in that, combining themselves together in that area, gives you a lot of strength at the back of your move, give you a lot of strength at the back of your move. All right, so looking at that structure, I can see the behavior. This trade I did not take, but I come in here to take this one. Do I take it with a bit of hesitation? Yes. Do I have an objective at the back of taking it with a bit of hesitation. Of course, I do have an objective. And what is my objective at that point in time when I'm taking this? When I'm taking this, the trend line, this is the reason why you cannot be a one-way traffic trader or just want to know one single thing. And this is what I was sharing with you in the room yesterday, that listen, you have to know everything. I don't care how you want to see it, because each and everything that you know helps your understanding of how you want to place your analysis. The first thing that I would do if I want to draw a trend line is look at this particular low. Right there, and then I want to extend it to that one, okay, and then I'll keep going up. I'll be tracing all the lows, all right, such that when we have this break, do I have a skepticism at the back of this break that we've seen over here? I've seen it before. We find a support and then we can break down the support, and when we break down the support, we come to an area, right, of we come to a very, very valuable area. Let me show you. Most probably some people cannot see that area, right? So go back to 30-minute charts. When the same thing repeats itself over and over again, then you start to understand. When we find a support over here, right, there's nothing to base our judgment on. Traders will still find a reason to extend the price. So we want to find whether below here, right, whether there's still more sellers below here that's willing to push the price down, all right? The same thing occur over here, right? Traders will still want to come in to find whether there are more sellers below this price, all right? So what they're looking for is whether they're going to see sellers that are interested in cheap, that are interested to push the price down. Once those sellers dry out, okay, and this is what I show the people in the mentoring group. Once you see that insignificant sell, expect it's a impulsive move with a correction that leads to continuation, all right? That once you see an impulsive move on your chart, just have a bit of a patience, all right? If you're joining the price at any point in time where an impulsive move comes in, have a bit of a patience to see the correction of that impulsive move, to see the continuation, because the continuation should be another huge impulsive move that wants to push price all the way continuously down, okay? And that would be the first clue. So I've seen this impulsive move, then I'm waiting for the correction. This is the correction which we've seen over here. That couple of hours correction, all right? When you implement this and start adding this to your tool, then you start to see things correctly. So the impulsive move comes in. There was an impulsive move over here before. Impulsive move shows you this is the direction where I want to go. Yeah, you were sleeping. You didn't miss a lot. Shows you this is the direction the price wants to go at that particular point in time. It will be in a perpendicular direction. Right, so identifying this or seeing this on your chart shows you, okay, I don't want to go against this. Then I'm waiting for the correction. The correction of this one gives us some kind of little pennant, all right? And that correction will give us a continuation, okay? The key thing about this impulsive move is it's usually from some kind of how do I know a corrective move has ended? Because that corrective move will come in a pattern. The impulsive move moves in a perpendicular manner, all right? Which let's have a look at it. The impulsive move, you don't want to go against it. I'll show you how a correction has ended. So when you look at the low of this impulsive move, to the high of this impulsive move, that's a 72 pip move. You are expecting almost the same after the correction, and I'll show you how a correction is ended in a minute. So when the correction has ended, you are expecting the move of the correction to give you at least 90% of what the impulsive move gives you. All right, you can't control the impulsive move. You only want to be in the direction of the impulsive move. All right. So in a correction now, however, what you will be realizing is this: you'll be realizing that the price is not going to be moving in an impulsive manner. The candles will be much more shorter. So what you want to do is you want to be looking for the range of that correction. You want to be looking for the range of that correction. So in a manner, on a 30-minute chart, it might be difficult for you to see it clearly. The longer the time frame, the longer it will be difficult for you to see the correction clearly. But once you spot an impulsive move, start looking at your smaller time frame. An impulsive move is that move that you see that moves in a perpendicular manner. This is an impulsive move, right? That's the direction in which the price wants to go at that point in time, and nobody can change it. So when you start to look at your smaller time frame, and the candles are not, they are not going to be as forceful as this impulsive move that we're seeing over here. I've done so many classes on impulse and corrective move. The move that you are seeing inside there, okay, for the impulsive move, we give you the direction. The impulsive move will give you the direction of the trade. I've got, all right, so I've got, let me say hi to every single person that's here today, and I've got my wonderful friend just about to join in as well. I want to say hello to my Vice President, Buki. She's here with me. She has always been very supportive. I want to say hello to Doji. Thank you for joining in. Edward Alabia has been a wonderful participant as well all through the time, right? And then I've got Jalil, my childhood friend, is here all the way from Nigeria. I've got Jumai, my big fan as well, all the way from Kaduna. I've got Olajide here, my wonderful mentee, all the way from Lagos. I've got Shegun, a very, very important person that we're raising along together, all the way from Lagos. I've got Femi Oyetade as well, all the way from Nigeria. My wonderful person, Shike Wurika, is here as well, all the way from the east part of Nigeria. I've got Tibian B, who I haven't really met, but I would like to know more about you. Tibian, oh, is that my friend from Bangladesh? Probably, I'm not sure. Then I've got Titi Layo, a wonderful fellow as well that always trouble me, and we do find an important trade together. I've got Tolu Wa Lokwe me, and probably we haven't really met, but yeah, it would be good to know who you are. And I've got a wonderful Wumi over here. She has always been trying, and I believe she has a very, very good performance last 2 weeks, she told me. And I've got Rakesh here. I mean, everybody help me to thank Rakesh for joining this training. Rakesh has been a wonderful person in my life. He has been helping me a lot with some coding. He come up with some of this coding that you've seen. So Rakesh is in the room as well. Thank you so much for joining, Rakesh. This is just my little groups that we tend to share trading ideas every weekend, right? And yeah, now that you are in, thank you for joining. So an impulsive move will give you that perpendicular move. It's almost in one particular direction. When you are seeing this, this is some correction. These are the noise that you see in the market, right? These noises, they will be giving you a particular range. You'll be seeing them having the same low, almost the same low, and almost the same high. You don't want to find yourself in that particular market. A corrective move can go on for time as well. So when you look at this move over here, this is impulsive, right, on this 15-minute chart, okay? and then the corrective move comes in some kind of bracket, all right, or in some kind of range, which you'll be saying that the price is not moving significantly as it's supposed to move, or you have to have a bit of patience to be understanding where are the lows, where are the highs, such that when you start to see price breaking below the corrective move, and this is where the patience lies, because when this move touch this area, okay, one thing that you can understand is this, and this one thing I like about what I keep advocating to you. When price gets to this area, there's a monthly high and low area over here, and a daily high and low over here. These are areas where price will make decision. Okay, so you can expect there can be some kind of corrective move over there. When price drop from this area and comes down to this area, you can expect that there can be some correction comes in over there. Usually price don't just break it down convincingly, easily like that. It will take a bit of time to make a decision around this area. So now you are seeing where your correction can come in some places. When price is approaching this area, we start to see some correction. But I tend to like when I see price hitting the zone that's got 1, 2 confluences together. All right. So when I'm seeing correctional move in that area, I know that, well, most probably this is what I'm waiting for, and then I'm waiting for that correction move to give me that perpendicular move again, which is going to be another impulsive. Okay, that impulsive move, we tend to stop somewhere. Well, look at where it stopped again, and we start to see correction, right? Usually this is the kind of areas where they will want to make another decision. And the decision they want to make is, are we going to see more sellers below here, all right? Or are we going to fail below here and see the buyers coming in to take over, all right? All these things are syntheses. They take time to enter your brain, and they take time for you to be able to see them and then make use of them. But you have to get yourself acquainted to your chart for you to be able to understand all this move. All right. So at the back of this impulsive move, the correctional move comes in. And like I said, you don't want to go against the impulsive move, because that's the direction of the chart. That's the direction where we want to be going. All right. And such that if you've had this, right, so you have to be able to challenge the rules. The rules will say that once you break a trend line, look for a retest, right? And then retest for continuation, okay? There's nothing wrong with that. That's one part of the rules. How about the opposite side of the rules? So when you see one thing that says one thing in one particular direction, you go have to look for how about the ones that they're not talking about. All right, these are how you start to develop your creative sense. Okay, so a lot of traders will come in. Over my own 14 years of experience, I won't be just saying to you that, yeah, just take the break, right? Obviously, this trend line got broken, right? This trend line got broken, and this trend line started from this low to manage the structure of this chart. The structure of this chart started from there, and the trend line got broken, all right? But look at this key thing. This key concept is very important. We've seen one impulsive move before, okay? We traded something like this on gold, and I used to show this a lot, but I don't know if I'm going to be able to do it again today, but I'll possibly do it. Once you see the impulsive move, the perpendicular drop down, then there's a correction, then there's another impulsive move. Then you are waiting for another correction. But at this point in time, the beginning of the move started from here, right? This is the first part of the wave, right? And then now, let me show you this. So you start to build a sense, you start to build a picture that, okay, I've got this part of the wave, first of all the way down here. I've got the second part of it, which is the correction. I've got the third part of it, which is the what? Which is another impulsive move. Then I've got the fourth part of it, which is another correction. Then I've got the fifth part of it. All right. So for people who have followed the YouTube channel and see the wave analysis and training, they will know that majority of the time after the fifth wave, all right, irrespective of whatever the time frame is, right? Sometimes it can go to the seventh wave, right? Don't get me twisted, but add all these little things to your trading. It gives you a sense of perception. It gives you a much more eyes wide open that, okay, I've seen the first move. All right, so let me delete this again and we do it again. We're looking for a possible 5-wave pattern, all right? And this is going to be the 0 to 1, okay? And then the 1 to 2, okay? And then the 2 to 3, okay? And then the 3 to 4, okay? And then the 4 to 5. After the fifth wave, what you're looking for is either a reversal pattern, all right? And that reversal pattern will come in to possibly lead to either continuation to the downside, all right? So after the fifth wave, we are looking for a kind of a slight little pause or a major change occurring. So when you start to add all this together, right, then you start to build a powerful trader at the back of the knowledge that you have. So at the back of that huge impulsive mode, you saw the little correction and then you saw the continuation, right? And then you saw another correction and then the continuation. But now look at the area where you have. Look at what you are saying over here. You have a particular area over here whereby the fifth wave is landing and ended, right? And it just doesn't end over there. What we're looking for is, are we going to see more traders that are going to be interested in selling this all the way down, right? But where are we? We are at the fifth wave or the fifth part of the move, right? Usually what you tend to see is change in direction, okay? But the one key thing that doesn't make this structure hold, you can see that low, right? And that low, and price tend to break this low is because we started with a huge impulsive move, the correction, and another impulsive move, and the huge correction, a little bit of correction, and then the continuation, which gives us the fifth wave, and things start to change. We tend to see this a lot all the time. So when I see that, it gives me more confidence. Plus, I know this support can be broken because we've witnessed it before. Then straightforward, I change my channel direction. The price will never want to behave the way that you're supposed to see it. But you have to start building all this idea and having all these key ideas at the back of your trading. Okay, this I started to change that and I started to look for things to the upside. I took another small trade right at the back of this, right, and then I think what tends to happen is I cut that trade early, knowing fully well that I still have another position that's running that 300 pips, and I don't really bother that much. I'm still in that trade and I'm still keeping it. And what am I looking for now? Look at here again. If you remember that support and resistance theory, right? So this will be another resistance theory, okay? And this resistance, for one reason or the other, if we extend it, okay, that resistance got broken again, all right? So why is all this thing happening? Why are supports failing? Let's see, support over here. Why are support failing? Mass psychology. The first touch, the second touch, at the third touch, we failed. The first touch, the second touch, at the third touch, we failed. Are you seeing those patterns repeating itself repeatedly? Over here, we have more than, say, even first touch, second touch, third touch. We failed, right? So what I'm trying to bring to your attention is this. Don't be an ardent, stupid student of saying, I'm going to just fix my opinion on one thing, all right? Start looking at the drive behind the move. Start looking at the wave the move produced. Is it in, as you reach the fifth wave, or what part of the wave are we? Is the move impulsive? I'm looking at the channel. When I'm looking at this channel, the one thing that I know at the back of this channel is I've shown you where I'm expecting the price to go. Does it mean the price is going to get there? Well, I don't know. If it gets there, you're going to ride it all the way to the top. But you know what is there already, just as much as you know what is down there at the same time as well. All right. So now the gradual push up, you will be seeing, what are you going to be seeing? When you start to understand that there will be this impulsive move and there will always be possible correction and continuation, and the continuation is going to find itself at the edge of this particular channel. And then after we've reached the highermost point, all right, yeah, that's fine. Okay, after we've seen the highermost point, you expect the price to retrace that all the way down. The second time we're touching that, so start understanding your structure and start adding things together. We touched it again, which means when we have a possible price still in this structure hasn't changed, coming somewhere around there, I'll be expecting two things. I'll be expecting that price is going to hit here, wherever it hits. It doesn't have to be that point exactly. And then I'll be expecting possible shorts, all right? The key thing is over here now, can I tally another thing to this area? So if I'm expecting that area, that price will come and hit the top of this channel, what else can I tally to this area? That is key. If I can't tally any other thing to that area, then I'll be thinking to myself, that is just one reason for me to take a short. How many reasons do I need to have? If I start to see something like this in this area, okay, so I start to look at this, I start to look at that, I start to look at price coming down to all this area. I've seen that initial sell-off before. It's not that hard. I can start to say to myself that price can come a little bit above even this area, fail this resistance, right? And then we start to see that sell-off. And that is the same thing that happens over here. Let me show you quickly. So if you sat on one resistance alone, in Masood, look at this area of resistance, right? Although you have this particular area that looks like a say price sell-off, but one thing that's good is just because everybody knows that resistance can be broken, you can expect your price to go above it, all right? So you can't say exactly, I'm going to pull my stop 5 pips above here, right? But when you start to have this previous daily high and low area over there, you can say, I want to pull my stop maybe about 10 or 15 pips or even 50 pips at the back of here, right? When I have that area, I'm not just going to say that price is not going to break my 200 EMA. I will look at the preceding move before we attain the 200 EMA. If that preceding move is an impulsive move, I can expect a correction, which will be short-lived and we still get that broken. So start putting all these ideas together and not just look at things that in this area alone is where we're going to see rejection. What if price now push above this area and goes to the eye of the structure? There's another dynamic resistance over there. These are static resistance, but price can tend to go and use a dynamic resistance as an area where to stop. So when both of them are closer together, I'm not just going to expect that the sell-off will come from here, okay? I can expect price to push up a little bit higher above it, reach this structure, and then expect that huge sell-off, okay? So, and I want to see that sell-off coming in an impulsive manner, because if we need to attain this low again, right, to use this low as an area of entry, we have to come in a manner whereby we are strong enough so that when we are getting to this area of low, right, look at what's there again. So does it mean that this structure cannot be broken? This structure can be broken, and then we find that price sitting around here again. We have the monthly and the weekly, sorry, we have the monthly and the daily zone in this area, and then price, we want to definitely make a decision around this area to see whether we're going to have more sellers where direction is going to change all the way down to the downside, or we're going to reverse from there just as what we did in this area here again and again. All right, so inside the small correctional wave, right, you can see the fifth wave pattern in there. Inside the big impulsive wave, you can see the big wave pattern in there. Like this one now, you can be looking at this and be saying to yourself, okay, is this giving me a fifth wave pattern? Maybe no, that is impulsive. Probably this can even be a correction and this can be a continuation such that this is even the fifth wave that's going to come over here. And once it's the fifth wave, you can know that the same thing that happens towards the south can definitely happen towards the north as well. All right, that is one way of looking at it. There's another way I can look at this and say to myself, this is impulsive. I can say this is a bit of correction. I can say this is a bit of impulsive. I can say this is correction, such that I'll be looking at this and say this is the fifth way, such that I can then have possible move below here that will start to come all the way down again. That is another possibility. So you have to have also different kind of possibilities at the back of your trading idea, such that when one is giving you a sign that is going to fail, right? And this comes with practice, okay? Such that when I'm looking at this now, I can be saying to myself, if this price is going to fail all the way down, then where are the big areas where I want to see price? The first area where I want to see price to make decision will be around there, right? So until price gets here, I'm not going to be looking for some possible rejection. The second area where I'll be looking for that rejection will be this area I here. Then the next thing for me to be doing is, okay, even if that is the case, I want to start looking at this area. I will now be tallying it together that will I have much risk, less risk in this area, or have less risk in this area. So that will be key for me. And when I look up higher as well, right, and this is taking your things very technical, then I'll start to look at this as well. I'll start to look at this huge swing all the way down and say the next thing I'm going to do is I'm planning the next trade as we are doing this class is, can I see this occurring? Right? So I'll be looking at that and say to myself, oh, wow, this is very magical. You see, I've done the groundwork. By the time I put the fib there, what can I see? 61.8 in that area. All right. So now I have my resistance. I have my 61.8. I have the structural high. I have at least three things that's telling me that this area is key. Do we know that there's 61.8 there before? No, we don't. How does all these things start coming into play? So look at all the things that I put together. Structure for the previous daily zone together. I put resistance, support area together. And then at the same time, I've put a feed there at the same time as well. So by the time I see four things like that, right? I haven't even looked at my EMAs, but four things like that, I'm looking at this area now as a next potential area to take a small shot. I'll be taking that shot against my long position, right? And this is going to be what we call an edge trade. This is the trade I'm going to use to edge that that long position. So as the price is going up, and I'm making some money, I'll see endeavor to take a little bit of short because I know that I want to target here until we break this down, right? This area down, all right? I'm not going to be looking for a possible change of direction. I still want to be in this trade, taking it long because my objective at the back of that trade is to get that 600 and something pips. Along the way, I'll be seeing some small trades which I'm going to be using. But now you can tally where you find your big entry, which is on those weekly wicks. I hope this is beneficial. I hope this is going to add to your training. And then now I'm going to pass you on to one of my wonderful students here at the same time that learn a lot from me, and she will be sharing with you our own view of the market at the same time as well, and how she managed to put it together and attain that consistency level that everybody is craving for. So, Buki, I'm going to be making you the host, and then you can take your time to put us through what you're saying in the market. All right, so I've changed you to the host, then you can share your screen, and then let's have you on board. Everybody kindly welcome Bunmi for me.
Hi, everybody. Can you hear me?
Yes, we can.
Can you let me know in the chat, please?
Yeah. Loud and clear.
Okay, cool. So again, as you know, my name is Bunmi. I learned a lot, like most of what I know, I learned from Bola Balogun last year and earlier on this year as well. So it's been a very good help. So I just say that now so you can know that what I'm going to show you is not much different from what Bola has been showing us today and in previous classes. It's just how I put it together, as in how I kind of use the information that he's given us. And also what my trigger points are, how I pick my trigger, how I actually enter the market, and how I set my take profits and stop loss. So I'm just going to use, if you can see my screen, I should have, let me look
for. You haven't shared the screen.
One of my charts.
You need to share the screen.
Okay, cool. Just give me a sec. I don't know what's going on. Okay.
So I think you need to look at the bottom of this, what's it called? This option. Okay. You've done it before.
Okay.
Look at the bottom. Hopefully you see the share button there.
Okay. So I'm not getting it. So
wait.
Share screen.
Let me first of all stop my own share anyway.
Yeah, maybe if you stop sharing, I'll be able to.
Yeah, then now you can share. Have you found it?
I found it, but it's not giving me the option to share.
Have I made you a host? Let me see whether I've made you a host or not. Probably not. I've made you a host. It should give you an option to share. Shegun. I still shared the screen with Jalil yesterday. Yeah. So where do you find the share button of the screen? Probably.
I'm using a laptop.
So, sorry?
I was asking Bunmi if she's using a laptop.
No, I'm using a desktop.
Okay, desktop. Okay, it's well. If you look at the space, the place at the bottom of the screen, you see participants, you see charts, you see share screen.
Yeah.
Right. So you share screen.
Yeah.
So if you click share screen, it will give you.
Oh, right. I get it. Okay, I'm there now.
Different options, yeah?
Yeah, I've seen it now. Okay.
Go to the particular thing you wanted to share. After clicking on it, then still look for a smaller button saying share.
Yeah. So can you see my screen now?
You're waiting for it.
Not yet.
So there should be
it's
euro, dollar, euro Aussie on the screen, if you can see it.
Got it too.
Yeah. Now you've shared it.
Okay. Right. Perfect. Thanks very much, Shegun. So I don't know, as I'm gonna, like I said, I'm just gonna do what I do, normally how I would go into the market and how I'll start my analysis. So if I just pick a chart, so let's just say GBPNZD. If we take this one. So now just going, I'll start from what Titilayo asked the question. I don't know if she's on the chat on the Zoom chat group, saying that sometimes when she opens the chart, she's just confused. And I've been there. When you know, if you just open this chart, sometimes you don't know where to start from. But this is how I put a bit of structure around it, the way, but exactly how Bola shows us. So I start from my monthly view, and On the monthly view, I'm not looking to enter the market from here. The main reason I'm on the monthly view is to judge the overall direction of the market. So this is GBP/NZD now that I'm going to use as an example. The current direction is like a downtrend right now. So I can see that there's a downtrend happening. I'm not as fast as, but so I just bear with me. So I can see that there's a downtrend happening. Okay, so give me 1 second, please. Okay, so there's a downtrend. So I try to locate myself. I try to find where are we currently in the market and just locate myself in that place. So whilst there is a downtrend, I can also see that there is a correction happening. So the last main swing, the last major swing low in that downtrend, I'll note it and I'll see what's happening to it. Now it is correcting. So there's a correction going on. So right now in the market, we're in a correction phase. So if I'm looking at this GBP/NZD for like a long-term play, or, for a long-term play, for the highest probability trade, it will likely be a sell. There will be opportunities to buy, there'll be opportunities to sell, but I'll be favoring the sell because I know we're in a downtrend. This is a correction that is almost complete, probably complete. You can't really know for sure that the correction is complete. But if you look at it, it's gone to like maybe 50%, maybe 61.8. So I'm thinking, okay, maybe the continuation is about to start, just maybe, but at least I know that there's a channel here, sort of, there's a correction pattern here going on. So, and that is where we are right now in the market. And that's all I do on the monthly. No, it's not all I do actually. On the monthly, I also mark out my levels. So levels, I have my main levels, which the first one would be, I'm looking for a rectangle now. Okay, so my first main level will be the very top, just at the top where I don't even know when market is going to get there again, but I mark it down all the same. So I've got my main levels there. Then I also look in the middle and then just look for, all those places that look like my reference points. And you will see why as I go on. So those are places where market has stalled, where market has turned around, just our support, basic support and resistance levels, places that that when price comes back there, price is likely to do a bit of a dance or give you some form of reaction. So I mark those levels down like that. And I just do it roughly at this point. I don't try to be massively accurate. Just do it roughly. As I get closer to price, I might clean that up and make it more, more accurate. Okay. So that's what I do on the monthly. So now I've seen my levels. I've seen the places where the market will likely react when price gets there again. I go down to the weekly. So now we're coming a bit closer now. You can still see my monthly channel there. You can see price going up and down it. I then adjust my trend lines at this point to sort of make sure that I'm capturing price correctly. So I do that, make sure I'm capturing everything I'm just trying to be quick now. At this point, I would do it more accurately. At this point, I'll make sure that, my trend line is touching the tips of the wicks, okay? So we're seeing this, and I'm thinking, now if that correction that we're looking at, remember we're in a correction of a downtrend. If that correction has actually finished happening, that is a strong rejection there. It probably has finished happening, but we have now started coming back down. Now, this is the middle of, it's like, for me, I think this is the middle, almost like the middle of nowhere. I wouldn't just look at this and say, oh, price is going to come down, it's going to come to this trend line and then enter a sell. No, I'm still looking, at this point, I'm still analyzing. I'm still looking at my inner trend lines at this point, and I'll do my inner trend lines like that. Those are the next places that price will get to for me. you know, for me to be able to say, oh, okay, I can expect a reaction. Am I going to buy? Am I going to sell? I do my inner trend lines like that, you know. So then I now try to see if there are any further levels in the market that's becoming clearer, because we're on a lower time frame than the monthly now. So this one obviously is one. There's a level there. So I just call them levels, you know, or reference points, as our tutor will say, you know, just levels, that places where market has reacted in the past. I know it looks like my chart is getting busy, but you'll see why. So now that's the weekly. I still know where I am in the market. I'm in that correction phase. I'm anticipating that that correction may have ended, maybe not, but whatever happens within that correction, we are now coming down. Okay. Then I go to the daily. I don't necessarily go to every single time frame every time, but just because I'm showing you, sometimes I skip one time frame and I'll just go from the daily to the 1 hour. I might skip 4 hour, or I'll go from the weekly to the 4 hour sometimes. But I just need to have those levels in there first, because that gives me direction. So Titi, I'm hoping that, can you all hear me?
Yeah, we can. We're just giving you the time of the day.
Okay, so I'm hoping that when you first, you know, I'm hoping that this puts a bit of structure and this helps you to not get confused, because when I first used to open the chart, it's like the candles are just everywhere. Where is the structure? Where is the resistance? Where is the support? But if you start from that higher time frame, whatever you see there, if you see price coming down, just put a trend line on it. If you see it going up, put a trend line on it. Determine what is your correction, determine what is your impulse move, just based on the kind of candles that you're looking at. You know, whether it's momentum, a series of momentum candles, or if you're seeing a correction pattern forming. So hopefully this is giving us a bit of structure. We're actually looking at it now. We're saying we know where we are. We're in a major downtrend from this big, from that big trend line that we have there. Oh, fabulous, Titi, I got your message. So we're looking at that major trend line that we've got there. We know that's from the monthly. And then we know we're in this correctional phase, which is now, price was making its way down as of the last time, as of Friday. Okay, so this is my daily view. I've put an inner trend line there. But what this inner trend line is telling me is that if price comes back to here, back to this trend line, I'm not going to just jump in. I'm still going to wait for a reaction. It's going to do one of two things, I would say. You know, it could break the trend line, because if you bear in mind that our large higher time frame channel or trend line is there. So it can get here and break it and then come here. But then if it does that, I know that my next stops will be around here, you know, those places where we have reference points in the market. But it might be making its way there. It could do that. It could also get here, give us a reaction like it does, like it did here and like it did there, and then go back up. And I'll tell you how I get that entry as well. So I'm still on the daily now. I'm going to go on to the 4 hour. Obviously on the daily, if I see further levels, I mark them. Like this one, I would mark. So like this one, I would mark that level. I'll show you now. So this is the daily. As I go downtown time frames, if I see levels in the market, I mark them out. You can see how price broke that, retested, and then went up. So that is a reference point in the market. Okay. So I'm marking those as I go along. And so now I'll go down to the 4 hour time frame. So on my 4 hour time frame, you know, it's all similar sorts of thing. I'm just looking at the price action. I'm looking at what price is doing. I can now see this bullish momentum candle. And then I'm thinking, oh, okay, we were in a downtrend. Is there a changing pattern? Are we changing trends? You know, what's going on? There's a bullish momentum candle here and a bit of a balance phase. So what I do to get into the market is when I see this, as I was just explaining, you know, if you see that bullish momentum, you don't just want to jump in the middle, oh, it's going up, I'm going to get it. I'll wait for the pullback. I'll wait for the correction, and then I get in on the correction. How I determine my correction, because I saw that question in the chat as well, that how do we know that the correction phase is over? I previously, there was a time I used to wait for the correction to be over, and then somehow it's over already, and then the continuation has already started, and then I still can't get it. So it's like I'm waiting. So then what I do now is, when I see that long candle, the way I find my entry, okay, now give me a second. Okay, so before I get to how I get in when there's already a long candle like that, remember that we're saying we're expecting that when price gets to our trend line, or when it gets to a structural point in the market, it will do something. It will give us a sign that it's, whether it's going to break it or whether it's going to just go on and go back in the opposite direction. Now, when I see that long candle, this is how I would enter this one. So this long candle is from 12th of May through, 13th of May, 3 a.m. We're on the 4 hour still. I'll drop down to my, let's say 1 hour now. This is that same candle, yeah. So in this, on the 1 hour, remember it's going to be 4 candles would have made up that our long candle that we saw before. So it's a series of candles, is this, and all of those. If I'm still, right now, I've still not seen what I'm looking for. But if you look at this at all, let's say we're here in the markets. Let's say when I came in, let's say when I came in, we were here. Okay, let's say when I came in, we were here. It's like 4 a.m. So this is 5 a.m. now. We're here, okay. And I've seen this momentum candle. I'm thinking, oh my God, BPNZ is going up. I'm going to go. I won't just hop in. I will look at my structural points in the market. Now, if you look at this now, this is like clear as day to my eyes. You will see that this, like, you know, these rectangles that we drew from the higher time frames. If you look at this line here, that looks like something that was support before. So it was here. If you look at it, price got there, bounced up. Then it came and broke it, became resistance. That support becoming resistance, and then resistance becoming support. Now when there got resistance, found resistance, that's all those rejection candles came back down. Now price came back there again, and it has now broken it. My expectation is that at some point price will retest that place. So somewhere around there will be a place of possible entry. Now, to pinpoint my actual entry, I'm looking for something within these 1, 2, 3 candles that make up that initial, you know, that long bullish candle I saw on the 4 hour time frame. I'm looking for something in there that will tell me a bit more. So this is my first focus. I'm thinking it's going to be somewhere around there. But even that, if you think about it, that range that I just drew, it is a whole 147 pips. So how do I know exactly when to come in there? But I've marked the zone. I'll drop down even lower. Don't forget, we're looking at the 13th of May. It's the 3 a.m. to 4 a.m. candle. So I'm going to go to 3 a.m. now on the, let's say 15-minute time frame. And then I'll show you the actual thing I'm looking for. So this is that candle. That's the 3 a.m. candle. We're on the 15-minute time frame now. So there are more candles. It's like, I don't know, 4 times 4. Like there'll be 16 candles here that make up that one big 4-hour candle that I saw previously. But let's say it's 3 a.m. And this is where I am in the market. All of this has not happened. I'm going to put a black rectangle there just to cover it up. None of this has happened. Okay, so let's color that black. Where is that? Is that it? No. How can I make this black?
Yeah.
Oh.
Then, right, slide it to the end. Exactly.
Yeah. Okay, so none of that has happened. I'm going to enlarge it a little bit. So we're here now in the market. In that long candle, I am looking for a pullback, you know, like, because when that momentum candle happens, that 4 a.m. candle that was so long and very momentous, when it happened, price, it's not likely, it is very unlikely that price would have just gone straight up like that without ever resting. So I'm looking for that rest, that rest within that 4-hour candle. And this is that rest within that 4-hour candle. This is when price came back down. So it's possible that, you know, in my head, I think about it, I said some buyers bought from here, they're strong buyers, price was going up. At a particular point, price will be so high that some sellers in the market will think this is high enough for me, this is value for me, I can sell. So they tried to sell, but because the buyers are stronger, the buyers still manage to push price up further. So that resting point, there is volume there. There is volume of, you know, the buyers that were in the market. There's the people that tried to sell. So that's volume in the market. That is, for me, that's a reference point. And if you look at it, it's one of our rectangles is even there that we marked from a higher time frame, either from the 1 hour or from the 4 hours or somewhere. So this is exactly what I'm looking for, that resting period. Now, within that pullback, because it's we're looking at an uptrend now, that resting period, I'll be looking for a red candle, a bearish candle there. That bearish candle is my entry. That bearish candle, I will be entering at one of 2 or 3 places. It will be either the wick. I know when that 4-hour candle, when it retraces, when I want to catch that tip of that retracement, it's going to retrace to this. Usually, you know, there's nothing that's 100% in the market, but I've back tested this and it works. It's going to retrace back to that red candle that's within that my momentum candle. Okay. So 2 or 3 places that it goes. It will go either to the tip of that red candle, the tip of the wick, the top wick. It will go to the entry. I'm sorry, what's this place called now? The open of that red candle, yeah? Or, I don't know, somewhere in the middle. Some people will say maybe 50% of that red candle. You know, I've seen some people actually put their fib on that candle from top to the bottom. Okay, so that's a bit, I don't know, it's maybe difficult for you to see it, but some people will put their fib from the top to the bottom of that red candle and enter on the 50%, in the right bank on the 50%. But, you know, I do that sometimes, most times I don't. I just look at that red candle and I know that from experience, it will touch that tip or it would get to the open or somewhere in the middle. So I sometimes break my entry into 2 or 3. My position, I'll break into 2 or 3. So let's say I want to enter with 0.03. I'll go with 0.01 at the tip. I'll go with 0.01 again at the open, and then 0.01 at the 50%. If you want to go into the market with 0.02, then obviously you just pick the 2 that you think, you know, happen more often. But if you're going into the market with 0.01, you know, it all depends on your account size. If you're going with 0.01, then what I would do, what I used to do when if I'm only trading 0.01, I would just go to my safest entry. That is the 50%, because I want my order to get filled. Now, for each of those entries, whether I'm, you know, for the wick, the tip of the wick, the open of that red candle, or the 50% of that red candle, I will not put it right bank on top of it. I will give it some breathing space. I'll give it like 5 to 6 pips, maybe 7 pips. So the high of this candle now is the tip of the red candle. Let's assume I want to get in at the high. So that's the tip of that red candle. The high of it is 0.3600. I'm going to put my entry at 0.3605. Okay, so let's put a red line there, a horizontal line there. So that's my horizontal line. Okay, so we're looking at 2.03605. Okay, and then so that's where I go and wait for the market. So as Bola always tells us, don't chase the trend. Don't think, oh, bullish momentum, I'm going to get in. I will go and analyze. I'll break it down to a lower time frame and then find my entry on a retracement. And that retracement, this is how I get it. Okay, so that my line is now at 2.036, whatever it was, 05, I think. So I'm going to take this rectangle off. I'm going to take off this rectangle. Okay. Can you see that? That's where price came to. You never got to the open of that candle. It never got to the thingy, you know. But that is the reference point. You know, that reference point, don't get me wrong, I won't start from here. I would have started from my higher time frame. So this for me is double confirmation. The first thing is there a structural point there? You know, there's a structural point there already. This one is just fine-tuning entry to say, okay, how do I get in? So my order will be waiting there. When the price gets there, my pullback would have been, where is it now? So when price gets there, my pullback would have been from there all the way to the tip of this candle, you know. But that's why some people will put their own, like, open of this one and add 5 or 6 pips, and add them. It depends on what your accounts can manage. But when it got there, it did react and it went up, and then price went up. All of those pips. But I've never ever in my life got 700 pips at a time. So I would have been looking at this thinking, there's a pullback. This is the high of that last swing, high. I'll be thinking, okay, that's one target. But you know, that is still a long way. So I'll go to a lower time frame, go and look at my structure to pick up where my take profit is, and I'll show you how my most reliable way of setting my take profit. Now, does that help in terms of entry? I mean, if you look at it again, somewhere else, if you look at this place as well, if you look at this is some momentum on the 1 hour or 4 hour time frame. It will be one long bullish candle. Yeah. Then I would have come down here and I would have seen this. You know, let's say at that point I've come into the market and I've seen this momentum, and I'll see this red candle. That's the red candle that I would target. You know, price came back there, went up at least to the height of that last swing high. And I usually look at the last swing high and say, okay, that's like my farthest, like overall target. But then I'll still go down deeper to find a more closer place to price. And when price got there, it went up, as you can see. Even when it came back there again, still around that red candle, it still went up, did a bit of a dance, and came all the way to the low of that red candle and still went up. So for me, that is important. I don't know why it works, but it works. So this is like a resting time. If you see a bullish momentum that you want to get into, so maybe you've missed the trade from the bottom here, you know, go just identify that candle, mark it down, know that, okay, this is it. But most of the time it will be the last candle formed anyway, because you are just fresh in the market. So you go down to the lower time frame until you see that, you know, until you see that resting place, that pullback within that your big candle. Now use that red candle as your guide, as your, you know, navigation to say, okay, I'm going to enter at the tip, I'm going to enter, you know. So that's how I pick my entry. Sometimes it works to the pip, as in the pullback will just come and touch the tip of this one and then go back up. Obviously, nothing in the market is 100%. So this is just something I work most of the time. It's high probability, and it's how I take my entry, especially, and it's not just that. So I would have seen this structure. So there are 2 or 3 things at play here. I would have seen this structure. I'll say, okay, that red candle actually happened at that structural, or that reference point. Then I'm using the tip or something of that red candle. But also, that's my line there. I will also put a fib on it. I'll say, okay, this is my last swing. Yeah. Excuse me. So price went like this. I want the polyline. Sorry. So price went like this. Yeah. It came to that, you know, that resting place. Then it went like that, and that's the point I'm saying that's the point I'm in the market. Okay, so this last swing, I'm going to delete that so I can see. Yeah, so this last swing from here to there, I'll put my fib on it. So it's gone from here. Let's say it's gone there now. That's the point I came into the market, remember? gone there, and I'll look at it, I'll say, okay, that is like this red candle that that line that I'm looking at on top of that red candle that I'm proposing as my potential entry is also at the 618. I didn't even see this before. It's also at the 618. So that is another confirmation for me in the markets to say, okay, there's something around that red candle. I'm going to enter there. I will check out what my maximum pullback will be at 0.01, 0.02, and what percentage of my account it is, and if my account can handle it, and that's how I enter the market. So I use all those as my confluences. It needs to be. It's not just any old red candle anywhere. I'll just pick it and say price is going to come there, and go. First I would have seen that. Let's go to the 4 hour or the 1 hour even. 4 hour. First I would have seen that. I have this picture in my mind. I know that this channel exists. I know that I'm expecting price to either do this and come down, do that and go up. But I've gone to the 1 hour and I've seen a bullish momentum, and I think, okay, how can I get into this? So that is my thought process. It's from top to bottom. Don't ever, please, go into like the 15 minutes and think, oh, I'm going to find a red candle. Price is going to come down there. That's not going to happen. It's not going to work. If it ever works, it's just sheer luck. So that's how I take my entry. Now, is that clear first before I go on? Oh.
Is it clear? Okay, it's asking if it's clear to some people.
Is that clear? Can people hear me? Okay, thanks. Right, so that's how I take my entry. Now, in terms of take profits, how I set my TP, it is quite similar as well in that I use the structure in the markets. So let's say I've seen this momentum. That's that same 3. Oh no, it's not the same 3 but let's even say, I've seen this now, and I've gone to my lower time frame. In fact, this one I wouldn't have. This is 15 minutes. I was wondering, because this one I would have needed to go to a lower time frame. I would have seen this big momentum here, this red candle, and then I'll be thinking, okay, how can I get in here? Well, what are my options? If I get in and I want to set my TP, let's say that I'm here now, I've got in on this candle. My TP will be, my first TP will be that first place where price is stopping. Where price is stopping. If you look backwards, I look backwards and I look forwards as well, So they always say you have to look back. If you look backwards, you see price stopping there. Wicks are important. Candles are important. Wicks are important. Where it's wicking and it's stopping, those are places that, will give you a clue as to where your TP should be. But my ultimate way of getting my TP, I use market profile. I can't even lie, because, but the thing is, if I show market profile now, I cannot explain all of market profile in a 1 hour class or even in a 2 hour class. It took a long time for me to learn it as well. But me doing market profile it takes a long time to learn it. But once you learn it, it's not so difficult to use. I think it's like most things anyway. I'm an accountant. To get a professional qualification, it takes a long time to learn and a lot of things. But once you know it, you're just there, you're just doing your job. Like doctors spend years learning to be doctors. But once they learn it, you just go to the GP, you talk, then they just tell you what it is, So I think it's the same thing with stuff like market profile as well. Let me just see. I think there's a message. It takes a while to learn, but once you've learned it, it's easier to use. So this is my market profile chart. So this is GBP NZD. Okay. So we're going to see how I do my take profits.
How long is a while? How long is a while? Oh my God. God help us.
Yes, exactly. God help us. Well, I read that. It took me months to read that book. And then another couple of months to, when I got the actual profile, almost like indicator, but it's not really an indicator, but the system. And then it took me another couple of months when I got it to actually understand how it works, what it is saying, the language it's speaking, and then how I would use it in my trading. It's not an indicator like you say. RSI is an indicator. If it's over there, it's overbought. If it's over there, it's oversold. It took me about 3 months. Full stop, there's no.
It's just a scientific way of organizing data differently to what every technical tools will be telling you. But
Yeah.
yeah.
So this is my go on.
No, some
Go on,
people
Ola.
are just taking it. I mean, I've got some students right now that we were doing that together and we were going through it together. But yeah, as you've said, it takes a while to learn all the process. Even when you learn all the process, you still have to be relearning it all the time. Then it becomes part and
All
parcel
the
of you.
time.
Yeah.
Yeah.
Let's go.
Even now, I still go back to the book and look for something. Oh, what did they
Yeah.
say about gaps? Oh, what did they say about, you know, fair value? So this is market. I'm just going to show you this from a high level because I'm showing you how I set my take profit. So that trade was from the 13th of May, if you remember. We entered here. So that's 13th of May. The candle was a 3 a.m. candle. So if I go to my market profile, I've removed stuff from this screen because otherwise it'll be too complicated. This is how it'll be too busy, is what I mean to say. This is how my chart looks. On a good day, my market profile chart looks like this. These are the eminent Mr. Boller's EMAs.
Yeah.
Trades. These are, and the rest of it is market profile and sessions, you know. So I've removed all of the letters, you know, some of it just to set my take profit, you know, so that it's cleaner, the chart is cleaner this way. Now in market profile, all these lines mean something. They are almost like invisible, I call them invisible reference points in the market, where if I'm taking a trade, I don't know, like here, if I'm taking a trade here, or if this blue line I'm pointing to, some people might wonder, oh, why is she taking a trade there? But it will be for a reason, because I'm seeing something there in market profile that is not easily visible. In the normal chart, you'll be looking at, you know, all the way down here, yeah, or something, but I can see stuff in the middle. Okay, so 13th of May, 3 a.m. candle is what we're looking for. So that's 13th of May, 3 a.m., 3:30. That's 3:30. So this is 3 a.m. So this is the trade that we got into. That's the card, because this, don't forget, this is my market profile. I think it's working on GMT -2 or something. I need to, I mean, this is my MT4, not market profile. MT4, I think I need to set my time. It's on GMT +2. Something like that. So our 3 a.m. is here, 5 a.m. Okay, if you're looking at bottom here, that red thing, that's 13th of May, 5:30 a.m. That's the time the candle finished. So this is the trade that I got into. That's the long candle. I went down to my 15-minute time frame and I saw that thing, that the way market profile would have helped me even for my entry is this. On that trading view, I can enter on this candle. And I said to you, oh, I'll go in at the tip. And I say that because most people don't use market profile. I would have seen that, and then I'll come here to get a clearer view. Now, within that candle, I can see this line running across. Yeah, within that candle, I can see that line running across. Just beneath it, I can also see another line running across. For the safest trade, my entry would have been this bottom one, this line, because I know there's something there in the market. That's a value area high from the past, from the previous day. So my mind is telling me the market is going back to test yesterday's value area high. And that's where I would have taken my entry. My drawdown would not have been much at all. Then my TP, this is why I came here, because you can actually take your entry from trading view. You can take TP from trading view as well, but this is how I take my TP. On that day, you know, bear in mind we're here on the day, we're still here. I've taken my entry. Market has, maybe market has not even gotten there. I'm just here now. I'm thinking I'll put a buy limit order here on at this line. My TP, this is a developing day. None of all this has happened. But I would have already seen this point of control. This line, this gray line running across is from that particular day. It's already forming on the day. On that day when it is still forming, it may not be in that exact position because it's a developing day still. So, but wherever that the black line is on that day, probably it won't even be far away from where it is, where it eventually ended up. But that black line will be my TP. And you can see that it's that'll be my first TP. You can see it's within structure as well. That's the place where price eventually danced around before it did much, you know. If you go to the past, you can see that, well, it's not that obvious, which is why market profile is good, because if I would have gone to the past, there's something there, but it's not even that, it's not as obvious as this, where price went and broke it, and you know. So that would have been my take profits. And there's no, there's nothing is 100%, but I'm like 95% confident if that price comes here to test this spot, it is getting to the point of control. That is where the most volume is in the market. You know what I mean? So that's my TP. It may go farther
magnetic
points of control. Sometimes you break it and go. Yeah, that is magnetic for price. Price will go there. When it now gets there, it may come back down. It may go all the way up. I don't know, but I know it will come. That's my first tip. So if I want a long trade and I'm in a trade that I think, maybe that I picked from the 4-hour time frame, I'm looking for a lot of pips, I won't be worried about this line. That line will only be like my first TP. Then I'll go up. The next one that is available, that's my TP too. You know, and I say this, and I've said this before in the chat group. This is just like the best laid plans. I plan it to the hill. So when I'm thinking that my TP1 is here, 0.01 TP1, then another 0.01 TP2. But by the time I get to that first one, and price is dancing like this, that's it. I'm closing all my trades. I don't have that.
Can I ask you, Buki? Buki, can I ask you a quick question? Yeah. Were you actually scalping this trade, or what's your overall bias of the GN itself?
Okay, so overall bias for GN is from here. Overall bias is here. My overall bias is that we're in a downtrend. I am favoring sales here, but like I said at the beginning, that's not to say that there will not be buy. There'll be buy opportunities, there'll be sell opportunities. So I'm just going to take what the market is offering at the time. So my overall bias is that rejection has happened there. I'm thinking it's coming down here. So if I'm taking buy opportunities, I'm most likely not thinking, oh, it's going to get to this POC, then that's my TP2 that I know. If I'm taking buy opportunities in that particular GN on that day, it will be like more shorter term. So if I want to look for the long-term trade here, I'll be waiting for price to get to a place like this and then go up, or ultimately to even come here. So in all those places, I might have small orders in the market, 0.01 when it gets here. And even the entry for when it gets here, I will use market profile for that to fine tune that entry. But if you want me to show you, if I wanted to follow my, so if we say overall bias now, and I'm thinking, okay, I want to be a seller in this market, then I'll be waiting for a break and retest of this, and then it will come down. Then I'll use the same principle to get my entry. So when it breaks and it retests, if there's a momentum thing, the momentum sell candle, you know, when it breaks and retests, you're looking for a good candle, a good momentum candle to form going down, a bearish momentum candle to tell you the market is ready to go down. That candle is the one I will now look for a pullback on it. I won't just jump in and say, oh, it's going down. So I'll just, once I form my overall bias and say, I want to be a seller, and I can see the market playing to that bias, breaking this trend line, retesting. When it's now coming down, I will now my strategy of entry will now kick in. I'll get that momentum candle. I will go down the time frames. In this case, because it's going down, you're looking for a up candle, like a bullish candle, a small bullish candle, like a resting candle in a lower time frame. And I'll use the same principle to take my entry. Does that make sense for me?
Yes.
Yeah. So that's my overall bias is to be a seller, but I still need the market to tell me that, you know, my bias does not really, the market doesn't care about my bias. I need it to tell me that it is ready to go down. So when it does that, you know, so is so in terms of entry,
can you show it on the market profile if you were going to take a sell trade on this trade?
Okay.
How would you know that the market is ready at that point? Do you get what I mean?
Yeah, for both overall buyers and even short-term buy, I would get my the market is ready. I'll get it from here, from TradingView. I'll get that bullish momentum, whether I'm in market profile or I'm in, I will need to see a break of that trend line. Now, what can show me in market profile that prices are coming down is a look at the value area and a look at the points of control. So if you look at this now, point of control was here 2 days ago. Then 1 day ago, 3 days ago, it was here. The day after that, it went up a little bit. Then on the third day, just yesterday, it came all the way down here. So it's not really decisive. If you see a decreasing value area, so value area is going down. Okay, look, hang on. And apologies to people who don't use market profile. I'm just going to show me this very quickly. So just so I have more value areas in the market. If you're using market profile, you will need to see value area like this, doing this. The value area will be coming down, So you would see this one. Then the next day you see that your value area is moving down. Then you can be thinking, maybe a break and retest is happening. In fact, this is the perfect example. You can see that when this day ended, the next day's value area came down. So the value area is sort of coming down, although I think points of control remained the same those 2 days. But this trend, in any charting platform, where is the rectangle thing here? Oh, I don't know. So, oh yeah, I know. Yeah, so in any charting thing, when you look at this, you're already seeing like a small, mini consolidation there. So there's something there, there's a line, you can say break, it's broken it's retesting, and then you can think that it's gonna go down. But the first clue in market profile will be your value area and your maybe points of control. Points of control may still remain the same, it may start to come down, but the value area will move. Even though the points of control for those 2 days is exactly the same points, I think, but still value area has dropped. So the points of control may drop, it may not, but if your definitive answer is the value area needs to be decreasing, needs to be coming down. And then so when I'm in market profile and I see value area come down, and by the end of this day, value area has come down versus the previous day, this is a break of that POC line, that structure, and the retest. Then I see that momentum red candle. That's my candle that I will now go to you can go to the lower time frame on MT4, but it's easier for me on TradingView. I'll now go take that candle, break it down to like 15 minutes. If I can't see, if in the 15-minute candle, there's still no resting period, no, blue candle in the middle, I'll go to 5 minutes. And then I'll go and take my entry that way.
Yeah.
Exactly.
Yeah, but in the actual sense, how would you know that the market is ready to drop, or is he changing direction to the upside? Because we've got this bullish momentum to the upside, which has not, if I don't know how to put this, should I say those others have not been filled, or there's a kind of imbalance there or something? I don't know.
Yeah,
really,
so,
do you get what I'm saying? Because that bullish candle that went all the way up, and now price is concentrating here, doing whatever it's doing.
This one?
No. We go back to this is a 4 hours candle. Okay. Is it 15 minutes? There was this bullish candle that went all the way up, and yeah, this very one, I would think, from my own little knowledge, I'll think that price should come down again to fill this candle that is so.
This one,
because it's
yes,
kind of
you're right. I think so too. But you have to know that it's not going to do. It won't necessarily do that immediately. I fully expect price to come back into this structure. I don't know whether it has done. So, yeah, I fully. As a matter of fact, as I'm like this, maybe this weekend, maybe the market opens, I will put a
sell limit
buy order here. But price is still far from there.
Okay, you see. Would you not write it down? Is the question. Because if your overall bias is sell on the higher time frame, you would expect that this bullish thing would have completed its own tenure and the market should continue
so I'll tell
in
you
the
why I will not
downtrend,
write it
isn't
down
it?
straight away. I'll let you know I won't write it down straight away. Because it is the market and it has not told me now that it is going to come
That's
down
why I
here.
need to
It's
know.
going
I
to
want
come
to know.
down.
That's why I'm asking you the question. I want to know when to know.
Yo, I won't get in I won't get in for a sell to sell it down to that place. I know it's going to come there, but because I don't know when, I'm going to look for a break. So this is almost like a small consolidation happening there now.
Yeah.
I'm going to look for that retest and fully. So you can see what happened here. It broke it, retested,
went back
but then that's why I'm always saying, when you see that break and retest, it needs to give us something that it is coming down. You need to see momentum. Look at all the red candles that came down after the first. So it broke here and it went there. Look at the red candles that came down. Those are not convincing.
Mm-hmm.
You know what I mean?
Yeah.
Even on the 50, you need to see a bearish, convincing candle, bearish momentum candle forming. That is the one you enter on the back of. Even that can still go wrong. They can still send it up, but you've done your analysis.
Mm-hmm.
You've managed your risk. You get so this. So for this to happen,
Yeah, go on. Don't let me interrupt you. I just want to point out something for you, for both of you. Then probably it'll be a lot easier at that point in time. But if you want to go on. Then I'll point it out when you finish.
All right. So if you want to wait to write this down now, you need the market to tell you. I'm always waiting for. It's like, I'm waiting for the market to tell me that okay, it's ready to go down. When I now see that break retest, and I see the bearish momentum candle, I then go and find entry and then bring it here. But my main thing, if I wanted to trade this space, because I feel that the market is going to come back and fill this place. I want to trade that. I'm coming to wait here. The exact same principle applies. This last, where is the last one? On the 15-minute, I don't know. So it will be something like looking at this candle now and saying price is going to come and tip it. Just come and touch the tip or the 50%. Or for the safest trade, just go ahead. The worst that will happen is my order will not get filled. I'd rather that my order doesn't get filled than it gets filled and then I have 200 people draw down. You get, so it all depends on the length of that red candle that I'm looking at and stuff like that. But I'll use the same principle to enter. And if we go to, if we go to a higher time frame, even the same thing still plays out. If you look at this one, same thing happened there. That red candle went up, that blue candle went up. Then it came back, and it came back first to the red candle. Went up, but not by very much. I don't know.
Give me 2 minutes. Booking, you're still going to continue, but I just remember one thing. And I'll say, give me control of your screen for a second. Yeah. And I have a mentor, I think that was around 2009. Okay. And one thing that my mentor always tell me is this. It will say, trade what you see, not what you think. Okay.
Exactly.
And some of those things, sometimes when I'm hearing that, I don't really so much understand what it would have mean. But over the course of my experience in the market, I really realized that trade what you see, not what you think, is a very, very powerful slogan, especially in the market. So Titi, I believe it's Titi that's asking that particular question. Okay. There's one thing.
I think that was Wumi.
Oh, so is that Wumi asking the question? Sorry about that. Who was asking the question?
It was me. It was Wumi.
Wumi, all right. So Wumi, you are asking a particular question, and I believe that's an important question in the market. And those are the part of the ambiguity that we tend to see in the market. Okay. So one thing is to be a technician and you are drawing all your lines and everything. Another thing is to just have that thought process at the back of it as well. When you look at this, right, although this may be a short-term outlook, I hope you can see that. Okay, please give me leave it for me for a second, right?
Oh, okay. Oh, sorry. Am I
Yeah.
sorry, love? Okay.
Sorry, just
Sorry.
leave the mouse for me for a second, because I think I've got
Yeah,
control
I've
of
left.
your screen, right? So when you look there as a technician, what you are using that to gauge is, okay, so there's an impulsive move up, all right? The main bias is to go down. So in the market, we've got what is called a longer term trend or longer term traders. We've got the medium term traders, we've got the intermediate term traders, and we've got the short term traders, and we've got the daytime traders, which are the last time frame. All right. So, well, some people will use the, what's it called? They will use the actual time frame to denote them. Say about, if you're looking at a 5-minute chart, then you are that daytime, 5 minutes to 15 minutes or 30-minute chart, then you are that daytime or the last part of the traders that hold their trade for just a short period of time, maybe within a day. Some people will be looking at this on an intermediate to a medium time level, okay? So, and that's the reason why breaking this down goes a long way, the way Buki has broken it down. The only key issue that we have over here now, which is not an issue per se, is are we expecting, sorry, I'm trying to, right, let me see. Are we expecting that there's going to be an impulsive move over here? I believe Shegun was looking at this trade on that particular day. He has even sent a chart into the room, right? There is an expectation for an impulsive move over here, first of all. So the expectation comes in at the back of some patterns. The expectation comes in at the back of this trend line that Buki has got. That impulsive move did not just happen. That impulsive move occurred fundamentally. All right. There was a news in the New Zealand over the night, and then the price stopped at one particular price level where it has stopped the previous day, retested it, and that impulsive move occurred. Okay, so that has happened. But where we are currently, the issue is now, how are we going to be certain that this price is going to come back down? Okay, one of the first key things is when you look at this area and you look at that area and you look at that area on the trend line, we are approaching an area on that particular trend line that can really be that inflective point where the possibility of price turning down can occur. All right, you can see that touch, you can see that touch, you can see that touch. And that's you taking things minutely, like taking things into details. When you see that and price is approaching that area, then is one key thing for price to come back up above this area that Buki has got. Let me see if I can. Let me see if I can. Buki, sorry for taking over your analysis. You're still going to carry on.
No, it's absolutely fine. I've more or less finished, to be honest. That's how I enter, that's how I take my TP, that's how I analyze.
Yeah,
I really more or less finished. You can.
I think the class still want to hear a lot from you because they are enjoying your class, and I like it as well. I kind of find it, sorry, let me see whether Control Z will bring that back. All right. So I kind of like it as well. What we are seeing over here is, you remember what we're talking about? We're talking about impulsive move. And what are we? What's going on over here?
Correction, small consolidation.
All right, so correction stroke consolidation, and correction stroke consolidation will lead to what?
Continuation.
Continuation in what direction?
In the original downtrend for this one. No.
Sorry?
In the original trend. You see that bullish momentum should go up after that correction.
Who is talking? Who is that giving us the insight? Someone is answering my question, and I like the way they are answering the question.
Yeah, the two of us talking at the same time. This is Bookie, but I think our voices overlapped a little bit.
All right. So we have that, and then...
So we should get, so the way it goes is momentum, correction, then continuation.
Continuation to which direction?
Upside. Yeah.
All right. So is this what we think?
It's a possibility, is what I think.
Part
so
of what we
if
think.
that's going to happen, yes, of course.
Part of what we think. But for this continuation to occur, what do we have ahead of us?
The trend line, the structure needs to be broken.
All right. So we have a limiting factor at the same time as well, isn't it? And that limiting factor is this trend line needs to be broken, and this correctional phase needs to be broken. The other slogan that I used to hear is traders continue to do the same thing over and over again until it stops working, okay? So what is the same thing that we'll be doing over and over again over here is we will continue to buy this low, right? And then probably in us buying this low, our stop will continue to be below this area, right? And then we'll be anticipating that price break this high, right? But in anticipating that price break this high, one thing you'll realize is your first target profit will have to be this trend line now. Initial target profit will be the high of this, high of this, high of this. So that's the reason why you have to be splitting your position into 2 or 3, such that when you buy this, your first target profit will be this place. If it's that place and you take your profit, 2 things: either you move your stop to break even and anticipate at that point in time maybe price is going to break here, or if you move your stop to break even, what's going to happen is price is going to turn back down and come and hit your stop. And in the eventual moment where that stop is sitting, if it hits it at break even, you don't have anything to lose. One thing we have to always remember is we are not in control of the price, right? But if we are part of that team that buy this low now, right, because it's so valid to buy this low, and then price break this, then that continuation theory will be part of it, okay? But is there any other thing that is so significant that will tell us that price can start to turn back down from here as well? Sorry, I'm trying to, don't do this to me. 1 second, all right. So I need to find an arrow. Yeah, I think I got it. Right, now I'm behaving so bad. So is there any other thing that tells us that price can turn back down there as well? So you'll be thinking to yourself that, wow, okay.
There is, because I think there's like almost like a fair value gap there that we think price can come to fill, and our trend line at the bottom is still there as well. Okay. So it can come down, but we need to see a sign from the market.
We need to see a sign from the market that it can come down. Okay, so what would be our key tools to see that sign now? First of all, we know there's a consolidation over here. The one key thing that will give us that sign that price is going to come down is we need to break down this level.
Break, yes.
We need to start seeing price come down this level. Then if you now want to take that trade, then you can take that trade all the way down it. Then the other thing that I will look for naturally is how are we treating the high? Sorry. Hopefully it's not going to be too big. All right, so I got it. How are we treating the high? So I've seen this high, okay? Now I've seen this high as well. Okay, and it's so natural that if we are going up, the next thing we should be seeing is more higher high, isn't it? It's so natural that that's the next thing that's going to happen. But the first key thing that we've done is we've tested this trend line. And what did we say? We saw price coming down like that. fair enough. We know that trend line is there. We are possibly expecting that. And then we need to be doing what? We need to be looking at the way that we are treating the lows as well. Sorry. And in the low, you'll be seeing that now what we are having is some kind of a rectangle. And in a rectangle, what the price will do is it will move from here to here, right? So you'll be thinking, wow, if I sell here to here, I'm making much more profit. Then you try to buy here, and then you'll be targeting high. You'll be squeezed. You'll realize, before I even get to the high, I've been taking out certain things is happening inside there. So in a consolidation, instead of your profit margin to be increasing, okay, now that you've seen the triangle, what you'll be realizing is even if I buy this, my profit margin won't be more than here. We are now finding ourselves in a much more huge consolidation. So the next key thing that everybody is waiting for on this price is they want to see that key break. And now you know your levels.
That breakout, yes.
Right? So that key breakout is what is essential. Without it, you can't trade this anymore. Right? Without it, you can't really trade this anymore because this is squeezing you. If you buy here, the profit won't be more than here because when price gets here, there's every possibility that it turns back down. And when it gets here, you are anticipating possibility of a break. And when it gets down here, then it starts turning back up. So this is a 2-time frame market, right? And in a 2-time frame market, you don't want to be part of that. You will end up finding yourself in a 1-time frame market when we come out of this bracket. So this bracket is such a big confusion. And just because, and this is what is key, what kills traders most of the time is just because we've seen this, okay? Just because we've seen this, we are already waiting for it in one way or the other. But before this next phase, which is either the continuation to the upside or the continuation to the downside we occur, this move is so sudden, very sudden to the point whereby traders need to accept whether this move is true to their nature or true to the others in the market. They need to accept, and that acceptance is what we are seeing over here, right? This acceptance will now give us a condition as to whether I want to break back down or whether I want to break back up. But the key thing is if it's going to break back down.
Please give me a second. Let me borrow the mouse and admit someone.
Yeah.
Okay, go on.
Go on. If it's gonna break back down, obviously the one thing you want to be doing is you want to be selling the highs. If you want to take the if you want to take the trade from a very good position, you want to be selling the highs. But are you going to be sure that this high is high enough for you to sell, right? Because you're selling a triangle. So if you sell the highs of this, any highs of this, you will find yourself in a triangle. That triangle won't be so pretty because the price won't develop immediately for you the way that you want it, you know, because you are in the middle of nowhere. So when you start to look at it from a bigger time frame now, then you'll be thinking most probably the best idea is for price to either break down convincingly, right? Until that breakdown comes and comes all the way below all this place. Then you don't want to play. But the key thing is, even if you're playing price coming down, right? One thing you'll be understanding more than anything else is this impulsive move is not a joke. It's a decisive, impulsive move, okay? If you don't take the trade from this high and be brave enough to take the trade from this high, I think we were doing things like this a lot in the class, and I and Shegun, we will be taking some extraordinary trade like that, and at first we'll be wondering, is it really going to work out? But certain things are there on the market profile, like Buki said, that will just give you that confidence to be able to take this trade. These are the craziest trade that you can ever take, and eventually when you see the results, it will be so magical that wow, okay, this actually worked out. So, but on the market profile as well, you can see it's developing. Probably the value was over here before, and now the value has moved up. But if the value is overlapping, what I'm telling you is, well,
we can't see what you're pointing at, Bola.
You can't see the screen. You can't see Bookie's screen.
We can see the screen. We can see the screen, but your cursor is not moving to whatever you're pointing at.
Oh, because Bookie is still using the cursor. Sorry. Probably she's still moving her mouse. So if she moves her mouse,
sorry.
you won't be able to see whatever.
I'm just going to turn off my mouse. You know what? I'm just going to turn my mouse off.
No, I'll leave it to you. Sorry. All right. So in this place, there is some kind of balance, which is the point of control will be somewhere over here. Right? After this significant move, the point of control would have moved over here. But this place over here has given us...
Okay, we're still not seeing your mouse. So, Bola, we're still not seeing your mouse.
We're still not seeing my mouse.
Yeah, maybe I'm no longer sharing. Let me just check the...
No, we're not seeing it.
Can you see it now?
Who is moving it? Is it Bookie? Is it you?
It's Bola. Bola is moving it now. I'm not moving it at all.
Okay.
So you can see it now. Yeah, we can see it now.
So over here, I'm saying we've got a particular balance over here, and we are expecting this huge move. What is killing this move now is this move occur in a way whereby we break this high. Right? So we can't overlook that area just because we move above and then we break that high, and then we are using this area as support now. You know, when that support breaks, that is when we can possibly say to ourselves that, okay, all right, probably we are coming down a little bit now. But until this support breaks, everybody that is trading support and resistance is still looking to push this above this trend line. But you have to understand that this trend line, I personally believe that I don't want to share my belief because sometimes it's right, sometimes it can be wrong, and I don't care what it is. What I care about is if I'm taking a sell at the back of here, right, I want to take my sell as high as possible. I don't want to take that sell that has broken this. You know what I mean? Okay. Because that sell that has broken this is going to be limiting me to a little bit of what's it called, return. Okay, but I know this is a correction. This correction can come out of this trend line. If this correction comes out of this trend line and it doesn't come out as impulsive as ever, like this kind of move, right? This always happens whereby you'll be seeing the correction comes out and a lot of people, the trend line has been broken. But we are still within this structural range, right? Inside this structure, I want to look for a sell even somewhere here after we break the trend line. I want to look for that sell. I want to combine that sell with possibility of whether I have an EMA there or whatever is coming up. I want to see that at the same time as well. If I have a 200 EMA somewhere around there, then I'm still going to be validating myself. Everything over here, just the way that Bookie has managed to mark this area as a zone, all right? The sell still continues. As high as we push, I'll be looking for the sell. As high as we push, I'll be looking for the sell. In short, until I now see a big significant push above here. And the reason why I'll be looking for a sell above here is this, because my risk is very low.
Yeah.
My risk is very low. I don't want to take this sell in this area or in this area. No, I want to take that sell as close as possible to here so that my risk will be somewhere above here. It's only 0.01.
So this GNZ, the overall bias now is a sell, as I was saying before. If I take any buy trade here, it's a short-term buy, you know what I mean? But like you said, the main thing is to sell. Exactly.
So when you start to see your rejection candle, the way you see it over here where the wick is large, below this low, you just know that, okay, there's nothing I can do. You need to identify, are we in a trending market or are we in a consolidating market? So if you know that we are in a consolidating market, you are not expecting much until one time frame players start to come into this market and we start to see the break and continuous move up on the probably 30 minutes chart, continuous move up, but still inside this range, that is what you're going to be playing. You're not going to be playing a ranging market as this is expanding. You know, even when we break this trend line a little bit, don't just say that that is the break that you're looking for. You have to look at it that we are still inside this structure, because this structure is what is developing, and this structure is what is pushing the price. You know, we need to break out on the upside of this structure or break down on the downside of this structure. But we have to understand that this move up that we've seen is important as well, because it comes in at the back of, I don't know what longer time trend line that is, but Buki, I'll leave it to you to continue at the same time.
Okay, so thanks for that. Well, I'm just going to wrap up now. So basically, for people asking, okay, what's my strategy? How do I put it together? I do exactly what we've been taught, but I start from a higher time frame. From the monthly, I'm getting my overall bias, which is very important. It is the reason that we know. I mean, yeah, there's a bullish momentum here. So if you would have just come to the 1 hour time frame, you say, oh, the price is going up, bullish momentum. No. So that's one of the reasons we start from the higher time frame. We know that we are in a seller's market, more or less. We know it's a bearish market. So my overall bias is to sell. So when I get to the 1 hour time frame,
we are not seeing your mouth. We are not seeing your mouth.
Okay, no, I'm not actually moving it, but I was just talking through the wrap up really, but I'll use the mouse now. So I'm thinking, thanks for pointing out. I'm using my monthly time frame to say the overall bias is a sell. If I see a buy opportunity like now, where the price is now, is the middle of nowhere, I'm not going to get in here for any reason. Even if I wanted to find a buying opportunity, I'll be looking at the bottom of the trend line. I'll be looking at here for a short-term trade. But the overall bias is sell, and that's what we get from our monthly time frame. So I go to my monthly time frame to summarize, get the overall bias, mark out my main levels. Those main levels at the monthly time frame will usually price will still be far away from most of them, but they're there for a reason. As you can see, when we get
just
to the
1 second, Buki, give me a second, right? Sorry, I don't know if you can see my mouse. There's what we call market condition. Buki, you're going to continue. You see, the reason why Buki is taking that buy trade, yeah, is because we can't
see your mouse. We can't see your mouse.
Okay.
Yeah.
Can you see it now? Can you see it now?
Yes.
Can you see my mouse?
Yes, we can see it now.
Yes, we can see it now.
All right. So the reason why Buki took that buy trade is she would have looked at this particular move, and that is an impulsive move. Okay. And those are the people who are in control for that particular moment. These people who are in control with this perpendicular move, right? They are the one in control at that particular moment. And then what everybody might be looking for is possible retracement that will now lead to continuation to the upside. Okay, would that happen quicker enough? It wouldn't, and that is the reason why Buki is saying we are in the seller's market. The main major pressure is to the downside. So when this buyer find cheap prices and they push it all the way high enough to the hands of where the sellers can have an impact, right? Because let me show you where the sellers do have impact. Irrespective of whatever the buyers does, what they are looking for is all the buyers are looking for sellers, all the sellers are looking for buyers. So from here, I don't want to go too far. When we push all the way up to this reference point over here, the sellers take it back from us and push price all the way back down. We come back to this area. So like I said in previous lesson, you can know the first point, which is this area. You can know the second point, which is that area, which is using the trend line tool. You can know the third point now when you now join the 1 and 2 area together for the third point to come in. So now we are reaching that third point. A lot of people have already taken a sell in this area already. Yeah. You know what I mean? Mm-hmm. A lot of people have already taken a sell in this area already. A lot of people are looking at this area as area of support, right? I am looking at this area now, that area of support, that mass psychology thought will come in and price will break this area and come to this area of structure over here before the sell-off will continue. That is the trade that I will be planning at the back of this, all right? So I'm not saying that having that plan, to me, is the best plan. Number one, if I start to sell over here, I'm selling late. But if I still sell here, I believe that I'm selling the high prices. Everybody that wants to make money wants to sell something that is very, very expensive. You know, if you can sell a house for £50,000, right? And then you get someone that's saying to you that probably you've got about one person that says, yeah, please, I'm going to buy it for 50,000 pounds. Then you get somebody that says, please, I'll offer you 65,000. Don't worry about that 50,000. Which one are you going to take? Are you going to say that, yeah, because it's my friend, my family friend, you know, or because we grow up together? At that point in time, you will deny your friend. That's extra 15,000
Yes,
to your
we are
pocket.
talking about money.
Yeah, exactly. So at that point in time, so if I'm seeing these high prices and you decide to offer this this price, I'll still be thinking, if I can get it over here, I have an advantage over you. You know, that's money gain for you. I will want to take my own over here because I know that this structure can give us the first point, the second point, and the third point can say come in at that point in time, which is the first point, the second point, and now we are in the area of the third point. For me now to see that area of third point clearly, I have to see the way the structure is developing. So I've seen this side, I've seen this side. Now I know that we are seeing a lower high, right? Which is giving me an information that, okay, the sellers are taking good control, they are pushing the price down, but have they done anything? They haven't done much. You know what I mean? They haven't done much, although we are seeing that we have a lower high. But if the price still push up to this third high, it will be referencing this area here, and my third high now, which is going to come in at the back of this trend line. I want to take it at the back of this structure. That's just another little tweak that and that's sell that I took. I'm expecting it to come all the way down, come all the way down, say carry on coming all the way down, say carry on coming all the way down, say carry on coming all the way down. But this coming all the way down can still be giving me some kind of a funny move. And this coming all the way down can just come so quick, right? So you have to start understanding this condition. Just because you enter a trade doesn't mean that it will just turn straight forward all the way down, boom. Because some people who have started entering this sell from this area now, say for example, someone took this sell for any reason and think everything is going to come all the way down because it's the seller's market, right? The seller's market now push them a little bit much more higher. This is the way they play the game. Everybody will be finding themselves in a losing position over here. All right, so someone take it again over here and thinking, oh, right, I'm taking it so close to that trend line. Then I'm expecting that price is going to move all the way down. Price didn't move all the way down. You know, all this thing comes with experience and then say push a little bit higher. When we got to this trend line now, we respected it like we really mean it, right? We may open on Monday now and price start to gap all the way down. Fair enough, it's not a problem. If it gaps and starts to continue all the way down, I know that, okay, that's respected that over there. But that is where I will now start to look at, let me see something quickly. I can decide to say to myself, do I have a confluence in this area? That price is likely going to be thinking of. Look at that. So in that area now, 61.8 is very close. And 61.8 of a Fibonacci level is very important level from that swing. Okay, I can decide to say this again. So the time you spend 90% of your time on analysis, right? Yeah. And you just spend about 10% taking the trade. Because in your analysis...
I just chip in there that what you just said about spending 90% time on your analysis, there's always a Chinese proverb that sticks in my head. And that proverb says, if you want to cut a tree down quickly, you need to spend 90% of your time sharpening the sword or sharpening the axe. So once that axe is properly sharpened, when you cut that tree once, it's falling. So that's what we're doing here, just trying to get confluence, trying to analyze it deeply, and then by the time you take your trade, you're confident in what you've done. So even if it goes wrong, you won't beat yourself up too much. You know that the market is not perfect, You know
what I mean? So over here now, the 61.8 is there. So this is giving me an assurance that we can literally find a reason to break this trend line, come and hit this 61.8, even move a little bit above it, and price start to come down. Is that what's going to happen? I'm not telling you 100% that's what's going to happen, but it works. Can that possibly work? 100% that can possibly work when you start to tie things down together. So there's 61.8 over here. Everybody is running from that 61.8. They are looking at it, they are respecting it. Can we start to see consolidation start to move to the 50 level over here? Of course, there's nothing wrong in that, you know. So you can start to see this move at the same time as well. So we are in here now. It's just about possibilities and the potential.
Yeah.
We can start to see this. We can start to see that. We can start to see us hit this 61.8, respect it, and price come down to this area again, because this area that we've broken is a key structure, and price do this, right? And then you'll be wondering, oh my God, it doesn't break. Then we come and test this major 50% of the larger swing, right?
Yeah.
So until you start to do your analysis like this, and when you catch this one, any of it that you catch, you are happy. If you catch this one, or you catch this area that I'm talking about, and then price move all the way down to here, you are still happy. You might not get the maximum result that you want to get, which is price turning all the way down. You don't really care. What you've done is you've taken a trade, right? That trade is going right for you, and then you know that in this area you can take a bit of a profit. Okay, if you have 3 positions in the market, at least you would have taken 1 out of that 3 position and move your stop to possibly break even. If the price show you that it's coming back down to this area again, this 50 might be what will now work eventually, right? And by the time this 50 is working, you're already tired out of the market because you've been doing so much mistake without structure. And then this might now point all the way down here. And then at the end of the day, you will now be able to find yourself in a position whereby you capture that, sorry, where is this? Because the thing is this, and there's so many other things that we can put together to be able to see where this 50 is on the market profile. And then we can start to see that, oh, okay, now we can capture about a larger number of pips, maybe about 5,000 pips if I can see it properly.
Gosh, that would be the day.
No, about 521 pips. This is going to be about 521 pips for the trade. I caught about 300 pips on one single pair last week, the whole of last week. So I can start to look at it from here, and then I'll be looking at this area as well and be saying to myself, what happened before? So it's not a magic, but look at this area with the 50. There's a significant supply level in that area as well, and it's tallying up with the 50, all right? So you're not just going to be looking at one point such that when one trade doesn't work, then you get disappointed and be like, oh my God, after everything that I've done in my whole entire life history, this one still fail again. No, it's a continuous game. That's why the market is there 247 every day for you to come in there and play, but play structurally. Bookie, I'll leave it to you again. Carry on, please.
Okay, so in a nutshell, this is what I do. So I start from the monthly, I mark out my levels, and you can see how I and Bola have used those levels on the lower time frame. So mark out my levels, get the overall bias, then move down one more time frame and see if there's any additional level that's now becoming visible because we're in a lower, we're closer to price. And I do that as I go along. And then when I come to say the 1 hour now, I see where price is right now, and I've called that the middle of nowhere. I'm not going to jump in and say, oh, it's going down. There's 2 red candles. I've told you how I would enter. I would use one of these triangles, you know, these triangles that Bola drew, or I would wait on this bottom trend line that I drew before and say, okay, when price gets there, it does not mean it's an automatic buy. I'm looking for the sign as well. You know, I'm looking for price to tell me it's going to roll like a proper bullish momentum candle. Then I will now use that my entry technique that I showed you. I take that bullish momentum, I break it down, I look for the resting period in the middle of it. I know price will usually come back and test it. And then that's when I take it up. So that's what I wait for. I get that bullish. So if I'm saying, oh, maybe I want to get in when price comes here, but most likely in this market, looking at this, I will be saying, I'll wait for price to get there and I'm selling because the overall bias is a sell, unless I want to scalp or I'm just looking for a quick short trade. If I'm saying I want to be a seller, maybe wait for the break and retest that I talked of before, or just go there to the top of the trend line, or the nearest one really is this one, and wait for my signs. When I get that bearish momentum candle, I break it down, I look for that small bullish candle inside it, and I know it usually goes there to pull back to go and get that, and I sell it down. So that's how I enter. My take profit, I've shown you how I've done it, but I've shown you so many different ways using these triangles, these trend lines, and your support and resistance zones in the market. You can look at this and say, okay, your take profit, your first one will be this, bottom of the little small triangle. Your next one will be this, the bottom of the larger channel, you know. So you can use that as your take profit when you're doing the sell. I use market profile. I would take my, you know, the next point of control or the next structure in there. And that's how I put it together. Where I'm still lacking is actually, you know, I do all of this analysis and I do it so well. You know, somebody has actually told me that I should even stop. I should not bother even trading. I should just be doing analysis, and people who know how to trade should trade, because I'll get in, my TP is like 80 pips. I'm out in 10 pips or 15 pips. Once I see like the profit is there, I'm like, I'm going. I'll just collect the money and I'll go. So I just need to get that discipline of trusting in my own analysis, because oftentimes I'll come back and I'll realize that price actually did get to my TP. The last one I took, that EURAUD that I took last Friday, not this Friday, yesterday, the Friday before, I was in it over the weekend. It was still in a bit of a drawdown, like 10 pips or so. And then on Monday morning when I woke up, or sometime on Monday afternoon, it had done 100 pips and hit TP, you know. But as I said, the only reason that actually hit TP is because I was sleeping. If I was awake and it was during the day, I would have seen a bit of one and have closed it. So I just need to get that discipline into my trading to be able to hold my trades to the end and, you know, move my stop. I've got it all planned out when I enter. I have 2 entries. I'm going to move my stop when the market moves to this point. I move my stop loss here. It's like you need to see my planning. I will write it down like military precision. But
that's the way that it's done. You have to write it down, so that when you go back to it, you have to be able to say that, do I really follow that plan? So when you don't follow the plan, you'll be able to know that I didn't follow this plan. Okay, the next trade I'm going to do, I'll try and follow the plan. And if you follow your plan and the trade still go to a loss, there's no need to get frustrated.
Exactly.
You know? So
what has brought me consistency is to nail down my method. Whatever, I'm not saying you have to use this method, but whatever method you have found, whether you're trading chart patterns or something, nail down that method, nail down your entry, and when your things don't line up, you're not entering the trade. That's what has brought me. When it lines up, enter, manage your risk, and then you will start to see consistency in, you know, in terms of growing your account. Get your 1, 2, 3, 4 steps right. Consistency. And the other thing I want to mention is confluence. Confluence is very important in the market. When I was looking at this now, saying, okay, the overall move, that's the 50% of it. That same 50% is at a major structure. The smaller move, when you put a fib on it, that's 6/8 of it. So you're looking for that confluence. I will then go to market profile and see that, oh, point of control is somewhere around there as well, you know. So get your confluences, get your steps, as in military precision steps, as in when this happens, I will look for this. Then when I get this, I will place my entry here. When I put my entry, this is where, you know, when you get that, follow it to the letter. And that's what has helped me. That's it. That's all. I hope I've helped somebody.
Of course. I mean, let's give a round of applause to Buki. And
amazing session.
To be deadly honest with you, this is what I'm talking about. You know, like I remember like last year when we first of all get started, analysis is one thing. Don't worry about it. It's part of your trading career. You have to be fluent in it. You have to be able to do it. You have to be able to explain it. You know, that is another aspect of trading. Does some people make money being an analyst? Yes, they do. I mean, hopefully maybe when God bless us and we are rich enough and we can bring Bloomberg or have our own African type of finance TV media company sooner or later amount of time, you know, a lot of people will become an analyst. But the real trader is not just going to be an analyst. You know, the real trader is the one that comes into the market and comes to take that profit out, whether he likes it or not, whether anybody likes it or not. He will just fight for it and get that out of the market, you know. And that is the real trader. And there are so many tools that you can use, you know, but the confusion is, which I've seen over the last few years, is some people are just lost in tools, you know, they are, no, not in tools, tools is even better, they are lost in indicators, you know, they are lost in every single thing. All these things, you just need to use them to match up what you are thinking. Is it right? Oh, is something telling me that it's not right? All right, so I'm going to give you an example which I was looking at. Bookie, let me see if I can make myself back the host, and then I'll give you that
I'll
example.
stop sharing.
All right, yeah, so probably if you stop sharing or whatever, I don't even know. Let me see what I can do. Okay, so going forward quickly, I will share my own screen. And then I will be looking at a particular pair, I think is the pound dollar, all right? And this is what I wanted to bring to your perspective. I think I've got the chart markup earlier, if it's still there or not. If not, all right, let's pull it up anyway. Oh, we're gonna lose that. GBP USD. So I'm gonna delete this. All right. So after deleting that, I was looking at a couple of things. There's what we call, I send that chart into the room. There's what we call static support and resistance and dynamic support and resistance, all right? And in a static support and resistance, you are just looking at the price in one dimension. Probably you are just looking at a horizontal line alone, okay? And when you're looking at the horizontal line, you know, which means you're thinking each and every time that price comes to here, then the price should bounce back up and continue. Some people will think it will continue to go up infinity. Price comes back there, continue to, does it work? Obviously, when price comes here, it works, price moves up. When price comes here, it works, price move up as well, okay? In this area as well, price comes somewhere around there, it works, and price move up as well. Is this, okay, this is a weekly chart. I want to show you that on a small time frame at the same time as well. As you know, your analysis needs to start from a big time frame point of view, which is monthly point of view. But if you look at these charts, this is, I think this is the chart that I sent to the room. Right, yeah, I think this is the chart. When you look at this chart, what can you see over here that is turning out of everything that you've learned in terms of chart pattern? I've brought some people over here who understand chart pattern. What can you see over here? Can anybody understand?
Bola, can you stop my mouse? I don't know, because it seems like I'm still moving. Am I disturbing you in any way?
No, you're not disturbing me. I'll start sharing my own screen. So what can you see? Somebody said head and shoulder pattern. All right. So when you see this head and shoulder pattern, where is it occurring? Is it occurring in an uptrend or in a downtrend? Is this head and shoulder, so it's occurring in a downtrend? Is this a valid head and shoulder? And what would be the expectation after the head and shoulder? What would be the expectation after this head and shoulder?
The trend will change.
The trend will change and it will continue to go up, all right? So in a way, 1 second, please. So sorry about that. So this is a downtrend. In fact, if we don't even have this trend line, most probably what we'll be thinking is we'll be thinking with this head and shoulder, what we'll be seeing or what we'll be thinking is the price is going to reverse and start to go all the way back up, right? So in this case, do we have the price going all the way back up? What we tend to see is the price just reversed. The head and shoulder got completed, the neckline got broken, and then the price supposed to start to move up, but it didn't continue. We couldn't find that continuation. And that can cause a lot of people a lot of pain because they've seen this, right? This is one of the tricks that goes on in the market. They've seen this and then they are expecting continuation. But what happened is this. When you are paying attention to a pattern, you have to pay attention to everything that occurs over there. As you are understanding your static support and resistance, which is that particular one that will stand like this. And what would this be? This is probably going to be a what? A resistance, a resistance, a resistance over there. As you're understanding that to be static and price is actually moving up to there, what you're thinking is, well, until the price actually break this, which is one of the things that we're talking about, that you can see that impulsive move and you're thinking, okay, the continuation will be to the upside. This is an impulsive move. The continuation that we are thinking would have been that continuation that goes to the upside, right? Which is going to be price probably need to start going up that way. But because we didn't get to break this area of resistance, which is visible in the market, right? This head and shoulder patterns completion failed, right? Why does it fail? Well, it fails because of this static resistance. In some other ways, like the trade that we saw happening over here. So we were looking at the market. When I'm teaching, I'm a different type of a person. When I'm trading, I'm a different type of a person. So I was looking at the market. I've seen this touch. I've seen that touch. I know when price comes down here, right? I'm expecting that there's a possible reason why price can possibly touch here and continue to go down, okay? But when I didn't have the EMA over there, what tends to happen is this. I start to look at price like this. I start to see this support, right? That's turning to resistance, okay? And I alerted my trading partner. I think it was me and Shegun that was trading these, but that day I was just so busy in my own world. I was like, okay, so we saw the break of this resistance. And the funniest part of everything is, just as Buki did, if we don't know what is going to happen over here, and then obviously we block this place up, or we have this area of support, previous support. You can see where even before the price can break it down over here, it takes a little bit of time. When price comes back to it, it forms this sell-off, and then you come back to it over here as area of what's it called as well, as area of resistance, and there's a trend line, this touch there, that touch there, right? And there's a trend line over here, and price broke that trend line. After the price breaks this trend line, we were anticipating, oh, this is an opportunity to be a buyer. If you remember, Shegun, that day, I talked about this candle. I don't know if Shegun is still there.
Yeah, I'm here. That's true.
I talked about this candle. I was like, yeah, a lot of people will be seeing this candle as a Maribuzu, but I was looking at so many things on that day for one reason or the other. I don't even know what. I was like, a lot of people will see this candle as a very strong bullish candle, as a Maribuzu, but there's one thing that I see in this candle is this. I can see that this candle is a squeezed in candle, and these are some of the things that you'll be able to learn from me based on experience and everything. A squeezed in candle is when in a particular time frame, the traders, they tend to especially when it's near all these key major areas. All the trade, they will squeeze in all their order, like they pump it in from the beginning even to the end. But where is this occurring? This is occurring near a resistance. And this candle was the reason why I said, no, I'm not going to take that long trade. We're not going to take that long trade. And the one thing we're going to do is we're going to have a bit of patience. And when we waited, this 30 minutes occur, that 30 minutes occur, and then this occurs as well. This doji occur in an area whereby the price would have done this. A lot of people will be saying this. There's only one reason why I didn't take the trade that day, and that is all you need. Once you see a reason why you're not going to take a trade, there's no need to force it, right? So we saw that move, okay? And then we saw this, and straightforward Shegun was even saying to me that it's time to buy so that we can push price up. This is not a question of whether anybody is right or wrong, okay? It's a question of how much do we know? What kind of experience do we have at the back of the market? There's nothing wrong in buying this, especially this candle, and putting your stop over here. But what then tends to happen after, and that's what I wanted to point our thoughts to, is look at this. We have a static what? We have a static resistance over here. And if that's the only thing that we are looking at, we're going to be looking at the price has broken that resistance, even with a bullish candle, even breaks the trend line, and then did what? Comes back to that area of resistance, find rejection, and price will be going back upward, okay? That is one way of looking at things, and everybody will want to buy, all right? If you have another way of looking at it, one single thing will be a reason why you're not going to buy over here now. And give me a second to highlight it at the same time as well. And when you look at this area, you can see that weekly line over there. Price is going to make some correction over there, but that's not what I want to show you. Another thing that I want to show you is this. What do we have here? For the people who have seen that, what do we have here?
200 EMA.
200 what?
EMA.
200 EMA. So when you have a 200 EMA, who is coming into the market against you?
The sellers want to push down now.
Exactly. So the sellers are now having a reason to look at price. And what they're going to do is, how far has it gone? Oh, it's come down here before. Oh, it's coming from here before. Oh, see how far it's come. Okay, no problem. The seller, you are calculating your own buying thought process. The sellers are looking at 85 pips. If we can take that 85 pips away, it's not such a bad thing. And plus, where is the price anyway? The price is still in the region where the sellers have the utmost control. It has started from this particular area. This is the last time that price went above that 200, and we start to come down below the 200, such that the first time we went above it over here is a fake out. All right. So over here again, price continued to go down, and then we hit that 200 EMA. Everybody is thinking of buying. All right. So now the static resistance did not help. What helped? The dynamic resistance coming and save the day. You know, that 200 EMA that I was looking at over there is telling me that don't take that buy. You know, if you take that buy, you're still coming back here. The potential results would have been we took the buy over here at the close of this candle, we'll be able to make that 10 pip. We will see that 10 pip profit. And then at the back of that 10 pip profit, price will start to come all the way down like this. So tying things together, understanding your trend, right, which is on one video that I did on exponential moving average on the YouTube website. It's definitely there, how to be able to understand it, right? So now you've learned the static one, the support and resistance, which is there. Don't base it on that alone. Now look at this at the same time as well, what we are talking about in terms of structure. Okay, so if I break this down to probably a 15-minute chart, and this is the trade that I was explaining to you on the pound New Zealand, that I want to see that that trend line can be breached, and then I'll be looking for, this is the first touch of the eye, right? This is the second touch. Everybody is selling on this candle. You can see that red. And then the third touch comes back in again, right? And that is where the actual selling, in fact, take place. So we've come back here, and this is not just a static resistance. This is a dynamic resistance as well, because it's not in one place as the price is improving. So how much do you know? Do you understand there's a static resistance? Do you understand that there's a dynamic resistance? Are you tying that with your time frame? It's so important, especially when you get to area of mass psychology. I talk about all this area a lot, right? Where the support and resistance will fail, because there's a trend line there. There's so many people looking at the price over there. There's so many people wishing and willing to deceive each other. The key is, I will say, following the overall direction. Obviously, on this 15-minute chart, you know that when price even comes to this 633 EMA, right? That is when we've now gone over what? Overbought in this particular price area, you know? So, and this is another thing that I noticed as well that I want to add to the training today. Once you're getting to all this area, the ultimate thing that you want to do is just be patient, right? Don't necessarily think that the first move will be the one that will work. Just be patient, because you know already that, okay, I've come to the 200 EMA, I'm expecting them to defend their position. Maybe they're going to come in immediately on time. If you do not have other tools, if you do not have market profile, you might be finding that difficult to understand that what exactly is happening in this area. But maybe if there's market profile there, then maybe we'll be able to see exactly what happened over here. Let's see whether there's something there, really and truly. So while that opens, so you can see that first touch, that second touch. These are all the little things that you need. And at the back of all these little things, it can really make a significant difference in the way that you trade. Because the key about trading is not just about you waiting for someone to do it for you. It's about you able to do it. When you wait for someone to do it for you, well, they will take your money. They will tell you they're going to do it, right? And then when they do it and they lost your money, you'll be wondering, wow, am I a fool? Should I even try to learn this by myself? But when you start to learn it by yourself, gradually, day by day, that learning process will be consolidating itself. And then a whole big picture will be emerging. You know what I mean? Because at the back of all this, the one key thing is this: the daily picture is still important as well. So even if this trend line got broken and we thought price is going to go up, right, on this day, let's look at this day differently. Around that day, let's look at it differently. And I'm going to go to the daily chart to go and see how we can find that. Where that is. Okay. So we are here. All right. And what I'm going to do is I'm just going to put a horizontal line over here. Okay. And that horizontal line, we know that it's on this candle. I'm going to delete everything first of all. All right. And the horizontal line comes, I probably think, at the back of this candle or this candle. Okay. If you really want to know the direction where things are going to go, using the EMA, what's the first thing that will alert you to what the direction is going to be if we don't even know what's happening there? Let me block it. Let me block all this. Okay. So the new week is coming or whatever. Ignore this red as well. We have this doji, all right? And then we have this bullish candle, okay? If I ask you, where do you think the price is going to go? The first thing that I personally am going to say, let me take away this as well. If the day close like this and I ask you, where do you think the price is going to go the next day? What will be your first buyers?
first bias would normally be buy because
right.
you see, like you're seeing two subsequent green candles.
Exactly. So everybody will be thinking of buying over here. Okay. All right. So is that a wrong thought for you to think that the first bias is going to be a buy? Is it a wrong thought?
It's not, I don't think it's a wrong thought. I think that when you just get your bias, then you bring out your tools. You bring out your support and resistance. You look at your support and resistance in the market. You look at your overall trend. You then possibly use your EMA. Now, when you say that it's underneath, we're underneath the 200 EMA. We're underneath the, is it the 12, that blue one? Then you might start refining that bias bit by bit.
So thank you for that illustration. What happened over here? What can we see over here?
EMA cross.
EMA cross. Is that Wumi that's talking?
Yes.
I know you will be very sharp at that one. Yes, no doubt. So the blue has obviously crossed below the orange, which means who is in control at that particular point in time?
Sellers.
The sellers are in control, which means when the sellers are in control, the trick is this: just be looking for your resistance. Once you can identify that the sellers are in control, right? Just be looking for your resistance. Over here, you might not see that resistance clearly, okay? But I know one is there. The reason why I know one is there is because this price managed to push up higher. But what pushes the price down? What brings about this big wick? I remember we talked about this a while ago.
The buyers pushing it down.
Sorry?
The buyers pushing it down.
No, the who?
The sellers pushing it
The
down.
sellers pushing it down. Even on this candle, what happened here? Although we have a forceful push up, right? The sellers say come in and push it down, which means this is already alerting us to every high prices, right? Up to this high, the sellers are available on this chart. So the big time frame is an important time frame. By the time you look at the 4-hour time frame now, okay? So if I'm looking for my area, by the time I look at the 4-hour time frame, I want to check all the 4 hours resistance area. One is in that area. And the only thing I'm doing is price break it, come back to it, then bounce back down. Price, come back to it, bounce back down. We're going back to there. So we get to this area, that's where that rejection occurs. And this rejection is almost half of the candle. What else is there? Okay, so if we can't see the 12 EMA properly on the, the 12 EMA properly on the daily, what else is around there now? 200. 200. And at the back of that 200, what did we see? That just small candle is telling us a 4-hour candle. Everything is going up higher, but this small shooting star is telling us that they are weak, they are not as strong as possible. And that is where, and I believe you mentioned about this day, when did they open that last week, Shedgun? They actually went to go and test the high of the previous day, and then that 200 now start to shape the directional bias of everything. So I think the big time frame plays a major picture in the way that we look at the market. And when we look at where the price is right now, if we look at the weekly chart, right? The one thing that we are looking for is this close so severely strong is where are the wicks? You know, the next weak area are all these places over here on the weekly charts.
So, but a quick input.
Go on.
Okay, now if we're looking at the bottom of the recent low on this weekly, all right, with the two pins, yeah.
Which one? This one?
No, the last two, the red and green.
Oh, this one. Yeah.
Yes. So it calls to mind that we need to look at distance to the MAs. You know, if you're find yourself at the bottom where those wicks are.
This
Definitely
place.
the two candles that we're talking
These
about.
ones. Are we looking at these
Yes.
candles?
Yes, those candles.
Right.
At the bottom of these candles, of course, with the placement of the EMAs, we know the sellers are in control. But if we look at the distance between the present, that place, that position, and the EMAs, that should inform, our trading decisions. If you get what I mean.
Right. So now we are coming to this area. Say, for example, we are breaking down, we are coming to this area.
No, even taking, let's assume we find ourselves present, let's say present day is those bottom, right?
Or if we are here right now, yeah?
Exactly.
Right.
So now, knowing that we are far
away from the EMAs, okay?
Trying to use the EMAs, because I know that some people might, or there might be some kind of misrepresentation. So the closer we are to the EMAs, the better for us to look for the sell.
Exactly. The closer we are to the EMA, the better. So, and this is the reason why I'm saying that there are different tools for different things, okay? So when we're looking at this now, we can employ the EMA down here.
Exactly.
We cannot employ the EMA down here. So the key thing is, what can we employ down here is the key thing, right? The one thing that is visible that we can employ down here is the wicks, right? Which we know that the bias ultimately comes in, right? Then we can look at history backwards for one reason or the other. Maybe there's anything lower there. Let's see, on monthly. There's something there on monthly, but I think, okay, what is there on monthly is this. This price is there on monthly, and we know that we have so many monthly wicks over here as well, which is alerting us that in this area, the buyers can play a very huge role in this area where we are coming to right now, all right? So let's assume that for now. So now you can see that we can employ the EMA at the bottom over here. Hi, hello. But now you now have to be like, okay, the EMA aside, what is coming up to me? What am I going into? The first key things that we are going into is this. That's the reason why analysis goes deep and goes deep and goes deep, and sometimes you get confused. But separating it can really help. Where you're going to use the EMA is different from what you're going to be using over here. There's no EMA over here. What can you use? Now you're looking at this week's. This week's will become very, very important to your trading decision. The next key thing is we have this big excessive move. This is an excess move. We have all this low over here. This low in this area is very important. We have a balance, right, which is going to show us that whichever direction that the breakout goes into is what we want to follow. But now the breakout is going to the downward direction. As we are going to that downward direction, we have challenge ahead of us. We can't ignore this challenge. The funniest part of everything is you'll be surprised to see that price will now come back to all this area of challenge and turn itself back up. Already you are prepared for that because you know it's a possibility. This is not a question of me using the EMA. You're welcome, sir. I don't know who is complimenting, right? So these are the key things. You can't have education. It's a problem. And it's a colossal problem. Half education kills everybody. There's nobody that half education doesn't kill, because now it means you can't trade over here. So now it's left for me now to start deciding, how can I be understanding the trades over here? It comes with experience. So the first key thing that I do is, if I go back to my, even on the monthly, I'll first of all be like, okay, I can't understand what's going on over there, but I have a swing over here, which I understand quite fully well. Let me measure this. At the back of the swing, maybe there's a Fibonacci somewhere. I don't know. I'm looking at 1.13 is very close. Okay, but it didn't actually touch it. All right, no problems. I'll put this on the side like this. At least I know that 1.13 is very close. I'll come back down here again. I'll look at this swing. to here. I'll be like, let me see what this one is saying. In this case, I can see that this particular one actually take out 1.13. Okay, so I've got 1.13 here before, I've got 1.13 here before. Straightforward, I'm looking at this area. I've got a confluence over there, okay? And the confluence which I've got over there, I'm not going to ignore it. It's like, for me, I've seen something. I've seen a trade that I can thief. Like, okay, I note this already, 1250. There can be a trade over here, 1258. There can be a buy coming in there. I've got confluence of two. And the funniest part of everything is when you take this buy, you'll be so confident taking it in a manner whereby the result of this buy, you'll be wondering, it might start to go to 200 pips, 300 pips, 400 pips. You can see that a preparation for this buy is not even when the trade gets there. So when you are not this prepared, it's a problem. But when you are this prepared, you're just looking at it, you don't know what's going to happen, but you know that this price cannot continue to go all the way back, down, and go down forever. No, it won't happen. Does it mean that we can take out this low? Of course, we can take it out. If we take it out, the next key level for me that I'll be looking at is 1250. All right, and it's a good round number in that area. There's nothing that stopped me. Whether anybody wants to say to me that, yeah, don't catch a falling knife or this or that, I'm looking at that number. I'm saying to myself, psychologically, that number is key to me. That can be a next good buying area for me. Then the next thing I see again, just the way that I see it, I'm not a magician. I'm looking at that, you know. So this is how your analysis that you're talking about will now start becoming versatile. This guy can start to come down and want to take out this low, all right? And as he's coming to take out this low, I'm looking at 1250, and I'm looking at a trade on this particular trend line. We can find this guy literally continue to push back all the way down. Let's assume just because we've been below here before to come here, you know, still closer to the 1250. So now my trading position is going to be looking at, I'm now looking at this particular area that whatever happens here to 1250, if it is a bullish candle that I'm seeing, some kind of rejection, the reason why this place will be good for me to take a trade is, look at this low, very cheap low, right? This is another very cheap low. Who doesn't want to buy anything cheap? This is another very cheap technical low. So when price comes down to here, you can just see that magical move that will just be like, boom, right? And that trade right there is a trade that you took at the back of structure, right? As this price is coming down. So this is the reason why sometimes, let me hide this, and hide that. Price hasn't get there, but you as a trader, you are already developing your plan, right? Such that when price gets to this area, you can be one of the first few people that understand this area. And this is what we do in investment banking more than anything else. Projection. Where is the future projection going to go? There's no magic over there. I'm just breaking it down to a sensible proportion for you, because by the time price is getting there, right, it doesn't matter if price even breaks here, but the moment price starts to come back up above there, you know, in history, the cheapest price that pound USD has ever attained is in this area. So this may still take time before it gets there, but you've already had that plan. It's more or less like you've already have savings for future, such that when this move now gets to this area and you are planning it, or you are thinking of it, and it will give you a low risk. The reason why it's going to give you a low risk is nothing will fall down forever and nothing goes up forever. So when something becomes excessively too cheap, especially at historical prices that we haven't traded before, some people will step in. They will be like, I've been looking to buy this guy for a very long time. Now I got it, right? Getting it for them might just be a move that they are looking for price to move from here. Sorry, that's not what I want to use. I want to use this. From here to this area again. 1,285 pips. That is how you catch trades like that. That is the beginning of you planning your next longer term trade. It's about, where do I get in? Where is my trade location? And at the back of that trade location, you are looking at some key things. Does it mean price is going to get there? Price may struggle to get there. So when I look at my previous daily highs and daily lows, the next key price, that is the cheapest price on the pound against the dollar, right? Final cheapest price will be somewhere around there, which is this area here. Let me look at it. Month, and that will be 126.47 was the last one that we've ever, no, sorry. Sorry, it can't be that. It's 114.09, a very key important level. 114.09 was the last monthly reference point that's over there as well. I note that. No problems. As we are coming down, the key thing is this: if we're going to be coming and the what's it called, the moving average has crossed like this, we know for a fact that anytime that we see that cross, price goes down almost 1,400 pips. Cross, price goes down almost 1,000 and something pips. Cross again, somewhere around there, price can go 1,300 and something pips. We are not at the beginning of this move, but the move has already started. I don't know what's happening in Britain right about now, but the one key thing that's happening around the world is the economy is going into recession, whether anybody likes it or not. So this move is not surprising at all. So we can still revisit all this low. At the back of COVID-19, when we see this retracement, the aftermath of it is now coming back. It's now coming back to hit the economy in a big way, and then the pound can start to post a new low. And when we start to see this new low now, this is an opportunity for us to take advantage. We have to always understand that when price falls so low, the first thing that will happen is traders will be looking for that cheap prices where they can take advantage of price and buy all the way back up again, right? But yeah, before we get there, now you know what is key. These levels are the levels that are key, but you can see that even if you are buying this, you are buying in a very dangerous area. Price can go up, there's nothing wrong, but the pressure is severely to the downside. So that's one thing that we need to put into consideration. That's severe downside pressure. And let me check some of the numbers that's coming up as well. So as we can see, there's nothing coming on. There's no any reference point coming up. So this area where we are in now, it's a very huge, significant area. Price doesn't really have anything in the recent time to stop it. The last structure that we have is that one. The next structure that we are looking at is this one. And this area. But like I said, they are not strong enough. They are not definitely strong enough. From when we've made this double top, right? The other thing that's important is this area as well. This is very important. After making that double top, this is key. The movement from air, the movement from air to air is very key. This movement here is very key, such that we can see the same. If I clone it, the most important target will be price coming all the way down to this area. When we break this, we still have a reason to come down. So there's a lot of potential for the pound to continue to decline over the next few weeks. We are in that bearish direction and price is pushing down. So the first thing that everybody will be looking for is all those 4-hour resistance. So 1 second, please. Sorry. This 4-hour resistance is the one key thing that everyone will be looking for. And you're going to be looking for situations like this. Let me see whether we have anything. Let me take this one off. You're going to be looking for situations like this, which is key. This situation is very key. You can see now that we are breaking it. We're coming down. So this is a dynamic, support that has been broken into a next support area. And then we're going to be looking at that continuously to continue to push itself all the way down to this area like that, right? So each and every time when we start to see price coming back to this high or this level, that is when we want to literally look for opportunity to sell again. That's when we want to look for opportunity to sell again. And we're not going to stop looking for that opportunity to sell because that's the only key that is available in this area. So that is my view on this. So take advantage of understanding the static resistance and take advantage of understanding the dynamic resistance. And if you can see that in your position or in any direction that you want to take, right? If you're only putting into consideration just say for example, you're only putting into consideration just this area alone, which is the static, this now will be your static resistance if price decides to come back up here, right? And then obviously you are not thinking of the 36 EMA. Say for example, the 36 EMA is not in the same region. This area now is becoming a very huge significant area because now you can see that you have the static support, which is somewhere down there, right? To that area, okay? Getting closer to the dynamic resistance, which is going to be over here because this static support now will now be turning into another support as well. You know, so these are key areas where it can be a very good location. If I add my strategy to it, so now we have a weekly high or low area. We have the daily high or low area in this area. We have that and we have that. So you have 1, 2, 3, right? And then the next 4 things that the fourth one now, right? I always like to look at 4 things and I want to see those 4 things complete. I'm looking at this trend line down. Price is now coming back up to this area. This is a very good area for me to take a short back. So this is a 4-hour resistance over there. Over here again will be another 4-hour level for me over here. So now in this area, I've got 2 levels. I've got the monthly highs or low over there. I've got the daily high or low over there. Doesn't mean price cannot go up. When price goes up, this is where I'm going to be waiting for it again in one way or the other. But I still prefer this area more than anything else as we continue to develop going forward, because suddenly you can see the price goes up. There's nothing you can do. We see that coming in all the time. And that's where most traders will be like, but I've done my analysis, the trend is going down, but are you prepared for this, right? When you are prepared for this, so the trend is going down, I've done my analysis, but are you prepared for this, right? When you are prepared for this, then that is when this is not going to be making much of a sense when you see it. When you see it, then this correction will now be a key reason for you to understand where can this correction end for me to take advantage of this again. You know, if you've taken this trade, which is coming all the way down, this move, let me delete this for now. So it's more or less like you've taken a trade that's coming all the way down to this level, right? Even if you take the advantage, all right, don't let me use the Fibonacci in a way. Let's use the pip count. So we've taken this trade. Comes all the way down, gives us 155 pips. Are you happy to give out almost 100 pips out of that trade, right? To gain this 194 pips. you have already made 155 pips. Most probably everybody is happy with that 155 pips. Out of that 155 pips, you lost 100, okay? And that's the cycle. When you lost 100, that means you only have 1/3 left. But before the end of the week, I can assure you most probably when you know your strategy, the EMA course, and you're following your strategy, then you see 190 something pips. It's not that much, but out of that 190 something pips in total, are you happy to give up another 100 pips? That is the wild moment. That is a madness that will never give you the sense to be able to do what, to follow your plan to the T, because what you're going to be giving back up is what is going to be unlimited. It's going to be a lot, right? And this is why hedging strategy come into play, right? And that is another subject for another day. In that hedging strategy, what we tend to do is we use the EMA as well, but it's more or less like going into a smaller time frame EMA now. We know that price has hit a longer term level. I was showing this to the students that I was doing mentoring the other day that, okay, and this are deep pricing level, especially at the back of this huge drop, right? When you see a huge drop like that into a big level, what do you expect next? You expect that consolidation because the levels are there. They are, if you can draw it by hand, they are previous day highs and lows, previous month highs and lows. I took trading deep like a wizard like that. I just want to understand everything. And then when I see price doing this, coming back up, and then we see that failure on a lower time frame, you know, to take out this low, I start to make my plan. And that is where the hedging strategy will start in, you know. But all these things, you can't do all these things in like the small little class that we do 1 hour, 2 hours, 3 hours. That's the reason why my class take 7 hours sometimes. I'm still talking because there's more to show you. There's always more to show you, you know. And then when I understand market failure, you know, then I start to see that this next push down is showing me that, oh, another market failure. I want to see it happening. That is the beginning of hedging strategy. Now I know that this area is a key area. I know that for a fact. I know that we've touched it once. Now we are trading back above it and we are failing to close back into it. That is the time that a lot of people will be looking for hedging strategy, because already I know with this that the trend is going to change. All right, I'm coming. Let's break it down. And you'll be able to see that trend change till it gets back to this area, okay? All these places you can mark it on the chart. So you have your big position that you are calculating in the direction of the trend, all right? Then, but the price has shown you that we have a failure to make a new low the first time, failure to make a new low the second time. That's a trend change when we start to break above this high. Right? When we start to break above this high, let me bring it up. I know some traders are still very limited in their training. It's not a problem, but this is what I'm trying to say. So we touch these two levels. Price comes from here, touch these two levels. Instead of us to continue to go down, right? We start to see we make a possibly, let's say we make a low, right? We make a higher low. Then this is it now. Let's look at this one. We make a low, and this is for edging. Low one, oh sorry, Ctrl Z. So we make a low, which is that there. Then we start to see, this is you now understanding the structure at the back of the chart. In as much as this lower, higher low, 1, in as much as we can't take out this area anymore, which is an area of reference point. That's the reason why I have these lines at the back of my chart, for me to understand those areas. Sometimes all you need to do is just sit down, and I'll show you that one as well. All you need to do is just sit down and you start to see things unfolding in your eyes. Don't do anything, and I'll show you. And sometimes when I say it, it'll be like I say, seriously, I want to trade, but the one thing that you need to do is sit down, and even when you sit down, sit back. Don't move. Let your computer be on the table. Just sit back at the back of the chair. Like, don't dip your eyes so much on the computer. Just sit back like that. Start looking at this structure. Low, higher low 1, higher low 2, higher low 3, right? The one key thing that I've noticed most of the time with all this line is this. When price hits it, price will break it. I like that one. When price break it, I like to take the trade that comes back to it, okay? And then find that continuation. So let's have a look at many places where that has happened. I will explain that hedging strategy to later, and then I'll show you that one, and then I'm going to call it a day at the same time as well, because I'm fasting. So I've got this low, I've got this higher low coming up. This area now, once I start to see price trade above this area, I know that the trend has changed. Technically, the trend has changed. I don't care if price comes back down below it. If price comes back down below it, it's even good. What I'm looking for is, are we going to take out this low now, right? In as much as we are not taking out this low, but the mental process is this. This is the reason why I like when some students say they get a pen and paper to write things down, you know, because these are developing, but you don't know what is developing. The mental process is, now you want to write it down. My big trade is that downward move, okay? But I've hit an area where price can retrace back most of my profits, all right? No problems. But I'm following the structure, and I know that price can retrace back most of my profit, because look at this. Price always like to come back to this area, then sell off. We hit that area again, sell off. We're going to hit it at some point in time. And it's very bad for us to have seen that. After we've seen this, it's a challenge, but you just need the insight to understand that now we've started to develop ourselves in a channel. Once we touch this low, right, and we've got these 2 points, we can easily extrapolate these 2 points already. Let me delete this one. So we can easily extrapolate these 2 points already. And that's why I always like the 3-point scenario. All right, so that point, that second point, right, and it gives us this low. Then we start to draw this. What you're looking for is the third point, right? And in some cases, that third point comes in somewhere here, right? And with over anxious, you are thinking, wow, look at it. Now the trend line has been broken. But you have to believe in the structure. The structure is pointing down. Just believe in it and be patient. Sometimes you need to see it unfolding, all right? You need to see it unfolding. You need to wait for it to actually unfold and tells you, rather than jumping in. So the third area is going to be here. In this third area, you are expecting possible sell-off. For that possible sell-off, suffer the art of many traders. This emotional suffering of 18 pips, it's not even that much, you know. And this is the reason why I always say that I like the two when I have 2 areas together. When you have 3 areas together that are so far away together, price, we have a reason to test this one. I want to check what is above it as well and see whether we're going to have that serious sellers coming in. You know, those are the kind of challenges you have when they are not closer together or very close together. Like in this place, you can see that the 3 of them are very close together. I always prefer this one. And in this area where I have the 3 of them congesting together, I can take a counter trend trade easily. When they are far away from each other, I should be thinking at the back of my mind that price can test this one and come and test this one. You know, when I have the three of them together, I have to be looking at that possibility. Now I have a roadmap. This is the reason why sometimes I always tell you that I have a roadmap, because my roadmap will be telling me that I can get to this junction and take fuel. This junction is what I'm expecting for the sell-off to actually occur. And then there's another one not far from me. There's another one not really far from me. But now we have three areas to make decision. Price always do that. That third point or fifth point. Price always like to test things either in twos to make a decision, either in threes to make a decision. You get to start to see this with time as you continue to trade. You get to, and that's what's going to bring in your patience in that. Sometimes if you test it the first time, it won't be satisfied. Test it the second time, won't be satisfied, and the third time, everybody will just give up. Sometimes if we test it the first time, won't be satisfied. Test it the second time, won't be satisfied. Test it the third time, won't be satisfied. The fourth time, won't be satisfied. And the fifth time, everybody will give up. You know? And you now need to start understanding where are those areas on the chart. Where can I see them? So when price comes here, this place is not far from me. 17 pips, you can easily touch that. You know? So already in your thought process, you're thinking that 17 pips can be a draw, can be a reason for me to suffer a little bit of emotion, you know, that is this thing really going to go down? Okay, let me just say I'm going to wait for it. I know that 17 pips is coming at the back of an area that shows over bought already, which is with this yellow EMA. So price can literally show himself around there. So what is key is understanding the structure that is developing, right? If you haven't seen the structure that's developing, then you need to start to understand that. And let me show you what I'll be talking about structure. So when you look at this, right, and we've talked about this already today as well. What kind of move is this? What can you call this? You can call that an impulsive move. You can look at that as correction, and then you can look at this as impulsive move to that. Even at the back of that rejection, every trader will take it, all right? But when you have a significant impulsive move to almost a trend line, there is always possibility for what? Always possibility for what?
Retracements.
And that retracement will be what? Possible correction.
Yeah.
Right? And that correction can lead to this thought process, continuation. Right? At the back of this continuation now that you've seen, you tend to see everything from this low. Impulsive move, correction, continuation in a way, another correction, which is not doing that much because it even stopped at the previous daily level and start to find support over there and push up higher. You start to think, okay, so one thing we tell you at the back of your mind that this impulsive move, that is correction, there might be another one leg move up again. All right, so now let's look at it like this. So 0 to 1, okay, 1 to 2, okay, 2 to 3, okay, 3 to 4, okay. After 3 to 4, what are we expecting? Probably a lot of people are not.
4 to 5 then.
4 to 5.
ABC correction.
Exactly, 4 to 5,
Yeah.
you know. So in your smaller time frame as well, you will see it there, the way the price develop and the way that it moves. Once a price set up in a trending moment, you look for that 1 to 5 wave motion. Once you've seen that that looks like what is unfolding, I mean, another day will come whereby I will do this strategy in depth and show you. Once you see that that is unfolding, now it looks like as if we are looking at so many things, but when you have them written down that, okay, have I done this? First of all, one, have I look at the structure? If I've done that, no problems. It's still part of my analysis. Have I the waves? Because for me personally, if I don't see something, I will still look for a reason to find something. Okay, if I've done that, have I look at Fibs? I'm giving myself more work, but in that more work, I'm seeing clarity. In that more work, I'm seeing the reason why my trade fails the other time. You get where I'm coming from? Have I looked the EMAs? Right. So when you look at yourself now and you look at what you are becoming a beast that's superseding every single thing that everybody is teaching, that every single thing that everybody knows. Have I looked at the support and resistance? Have I looked at the previous daily, weekly, monthly high or low? If you are not interested in looking at things that deep, trust me, you can't be a better trader. It's not a course. You get where I'm coming from? Even if they are not useful for you at that point in time, for the mere fact that you look at it, one thing will come at the back of your mind that, imagine, this one will fool me again. Am I not better off saving my money in my pocket? The more you know, that's the reason why I said I don't care what anybody wants to say. You have to know everything. At least know most of the things. When you are checking 6 things together, right? I know it's complicated. I know it's tough. Yeah? I know I will still look at the profile. So how do I get to understand all this knowledge? How do I get to impart it out? If I'm not looking at it, it's not going to be this versatile. It's because I don't want any trader out there to be able to stand and they are saying something and I'll be looking so dumb and I don't understand. You know, the market works on all these various scenarios, whether you like it or not. Go on.
Can I just chip in? It's Bookie here. Hi again, everybody. So just to buttress the fact that Bola is making in terms of looking at all those things. So whatever your entry, whatever your combination is in the end, because some people will use this EMA strategy. I use this EMAs a lot. As you saw it on my market profile. As I said, it keeps me out of bad trades, you know. Whatever your set of rules are, if you have that set of rules that you use to enter the market, when you now see that thing happen, you see that your setup, and this is what I should say, whatever your setup is. So you see your setup, you're saying you're waiting for the bounce off the 633 EMA. When the price gets there, you won't just bounce off. If you're using that my big momentum candle and you go and look for the small resting candle in between, and you want to enter, you will not just enter, you will look at the structure. Because you're saying, okay, I expect price to retrace here and then go back up. If there is a structure right above there, if you still want to trade it there, at least you know that's your first TP.
Can you
share?
Let me give you the mouse, probably because people learn when it's so visual. Probably you are saying something that you want to show them or show us at the same time so that we can all
learn. I'll be very quick. It will only be 2 minutes. So
yeah,
if you're seeing, can you see my mouse now?
No, the mouse hasn't started to move. If you're doing it on your own screen, that means you have to share your screen. But if you want to do it on my screen, then obviously I've given you control of my screen.
Okay, so what do I need to do?
You need to accept that control where...
Okay. But it tells me it says you can control Bola's screen. So
yeah,
you should be able to see mine.
Exactly, now we are seeing it.
Okay. Well, all I'm saying in a nutshell is just to buttress the Bola's point on these facts about knowing all these. I know it's a lot. Even I don't know everything. I look at my EMAs. I use my Fibs. I use structure. If you know, I think stop, support, and resistance. I use this previous day, week, month, high, and low. Even if you don't have all 6, if you have 4 out of the 6 or 5 out of the 6, try and get the remaining. Because what that means, what I was just trying to say is, if for example you wanted to use that thing where I said, oh, you look for a resting period. Maybe you see an impulsive move. You see this move like this from 0 to 1, and you want to look for that resting period where you get your pullback to continue. You can, maybe you are using that my method, or you are using your EMAs. You've seen your EMAs, and now you're ready to take it to, you're ready to get in on that.
You can expand the chart a little bit at the bottom.
Okay, let me expand a little. Oh, I think it's gone too far now.
keep going, and you can expand it more as well.
Yeah.
So that
Was
people
it?
can see where the EMA and everything is coming.
Okay, it was here. So let me try and, okay. I don't know if you can see it a bit clearer now. I don't think it can go any bigger than this.
Hold on, let me just leave them out for a second. I'll go bigger for you. Let me point it there.
Right, brilliant. That's much better. Thank you. So let's say whatever your setup is, let's say you're using that my setup and you've come to, this is the 5-minute time frame. Let's say you've seen that one big bullish candle on the 30 minutes or 15 minutes or whatever, and you come here and you see that resting period, you're saying you're going to go there and wait for price. Let's say your setup is EMA. You have seen price come back to this EMA and you're thinking, okay, at the bounce of that EMA, I'm going to enter. Whatever your setup is, when you see that setup, those 6 points that Bola mentioned are so important. Now think, okay, you're going to take a buy from here, but look at your structure. You know, you can see structure here. Maybe that's going to be your first TP.
No, you haven't taken control. The mouse is not moving.
Is it not?
Yeah, do it again. Waiting for Bookie to control your screen.
But I am. It even tells me here that you can control Bola's screen.
Can anybody? Yeah, I can see the mouse moving now.
Okay, yeah. Okay. So I'm looking at this example that Bola made, and I'm using this as my example. I'm saying if you're saying whatever, I say whatever your setup is, if you've come down to the 5-minute time frame to get the resting period and you want to enter, you're going to wait for the market there. Or your setup is the EMAs, you're waiting for the bounce off the EMA. You've seen price come to that EMA, you're ready to bounce off. Before you do that, as Bola said, check those things. That's the point where you need to check that's what we call confluence, isn't it? Use your fib and say, okay, from here, this swing here to here, you know, that place that you're planning to enter from, what's the fib? 50% fib. Okay, that actually lines up with 50% fib. That's one thing that you've used your fib. If that has told you something in the market, I'm trying to remove that fib. Okay, that has told you something in the market. Use your support and resistance. You can see there's resistance at the top here. So even though you know, okay, maybe you've already in your analysis you're going in an uptrend. If the overall trend is up and you're willing to take this up to that place, at least that structure will help you determine your take profit points. Maybe you have 2 positions, maybe you have 1 position and your partial close here. You do your re-entry when this happens. So you're looking, so you're using those things, those 6 checkpoints that Bola mentioned. You're using them for your confluence. You're using them to give you confidence in the market. You're using them to actually manage your trade as well. So confidence in the sense that, okay, there's one thing here, there's EMAs here. Those EMAs line up with 50% retracement. You know, that gives you the confidence to enter that trade. Then you're saying, okay, where will I stop? You're looking at this resistance now. That's your first place. Maybe that's your first TP, maybe partial close, you know. So I just wanted to buttress Bola's point very quickly. When he's saying we need to know all these things, it's for a reason. That is what helps us in the market. It helps us to enter the trades. It helps us to even manage the trade. When you say, okay, there's 633 EMA here, I better watch out. Maybe I'll partial close. Maybe I'll take my profit, you know? So it's just those things. I'm just buttressing the fact that those things are good. There's FIB, there's EMAs, there's structure. You're looking at your structure to help you to trade. And that's it really. I just wanted to chip that in. Whatever your setup is, when you see that setup, then you look for your confluence using those 6 things or any combination of them. It's not like you have to wait until all of the 6 things are there, but you need to have 2 to 3 confluence. Yeah.
Thank you so much, Buki. Right. So, yeah, I was explaining an hedging strategy that will possibly give me an opportunity to still be in the trade. You know, you're taking that sell and you know that sell can possibly go for a very long period of time, and you are seeing this particular move that's telling you that the trend is changing, you can still take a buy. There's nothing wrong in that, you know, and that buy, just because you've had your structure, this is the guideline now. Just because you've had your structure, that first touch, that second touch, which would have been this particular touch over here. 1 second. This particular touch over here is the second touch, right? And then the third touch will come in here. The third touch actually eats the 633 EMA. And when you look at what price is doing, let me show you this for now. And we can see it repeating itself so many times, right? And trading can be as simple as that sometimes, okay? In some cases, you will see it clearly like that. In some cases, you wouldn't. All right, so let's assume there's a weekly zone over here, right? Price break that weekly zone. In this case, we didn't retrace back to it. We come all the way down to a daily zone. In this case, we break that. We tried to retrace back to it, but we didn't. We still continue to break down. The only reason why we are not seeing that retracement back to it is just that we know that there's a very strong selling movement that's occurring in the market, such that when we get over here, the one key thing that I've seen more than anything else is there's a reversal pattern that occurs over here, right? Some people might not be able to see it, but then, and this reversal pattern, you'll be able to see it clearly even if you have RSI. But I'm not going to go into that. But this move that started to form this, I can see that the strength or the force of the move is not like when we are coming significantly down like this, all right? But we break a key level, and this area makes me know that this is a key level. We spend a little bit of time before we can break it, okay? Price comes back to that level, right? That will give me a very low risk opportunity. That level, just because I know that we take a bit of time, price comes back to that level, right? It's different from this level, we break it easily. But price comes back to that level, low risk at the back of here, 10, 15 pips risk. And then the one thing that happens is price never goes back to it until we come back to a common area of targets, which is going to be below here, okay? Not going to go in depth into certain things that much, but I just want to show you one thing, okay? So that's about 60 pips, all right? When you look at it again, when we look at it on the current day, on the current time frame, so that we don't go too far, you see what market has currently done. The moment price break such level, price breaks it, okay? Price comes back to it. In this case, we come back to it about 17, 15 pips. The sell-off occur, right? Look at this area as well. Big zone happening over here. If price is coming back to this area, already you know that you have a trade waiting for you over here. That's going to be, because we've broken it, coming back to it will give us a reason for us to do what? To take a shot in this area again, you know? So all those key levels, they are there in the market to take advantage of. We've broken it over here, right? Now, when you now add this one with your EMAs, you can see two opportunities to take those short trades. I'm not saying that price cannot break it back up again, but I'm kind of showing you locations where things occur. I mean, I'm not saying things doesn't occur over here, but when you have a place where you can see that majority of the time things occur over there, breakdown, retest, continuation to the downside. In this case, depends on where your stop is. Maybe you'll still be able to take advantage of this. But those kind of repetition comes in the market most of the time. It works in certain pairs more than the other, and you can see it happening repeatedly over and over again. And those kind of capitalization go so well in the market, especially with my own testing and back test. I can see it happening times and times and times over again. If price is going to break out from that zone, that's the zone where price is going to break out from. If price is going to break down, that's zone where price is going to break down for. Like this Euro AUD trade, the price can possibly break down from here to continue to go down, or use that area to continue to break back up. So little things. I mean, it's not going to be easy for me to say that take this strategy when I haven't seen you practicalizing. Even if I give you that strategy, then it's up to you to start tweaking it according to your own trading style. I hope today's class is a little bit uplifting and enlightening. Plus, Bookie was able to help me, and we were able to push it much more further. I'm going to leave it there for now. I'll look into some trades that I'm going to be looking into over the new week, right? Because majority of the class that I take, I don't take it based on slide. And when I find anything, obviously, I'm going to send it into the chat. I'm going to send it into our group chat, right? And then obviously we can still learn from that. And what I'll say to you is look at charts as well. You know, sometimes we might find ourselves in a situation whereby we can't even do any analysis, but more will come on. When more comes on, it will point to some things that it's looking at like this. I've seen some charts. Mo can give you some trade. I can give you some trade. Anybody in the group can give you some trade. You know what I mean? So the last time Mo come, put these two charts over there. You know, on these two charts, we can go over it. It's looking at, you know, almost the same thing that I'm looking at, but in a different manner. And I think we talked about this trade today. I didn't even realize that he has looked at it as well. You know, so when two ideas, three ideas is becoming one, then those ideas are going to become a solid trade idea, and everybody might probably be seeing it in the market, and then the trade will now eventually work. There's another one coming up on the New Zealand against the dollar. I think we struggle on this New Zealand against the dollar, and I know the reason why this struggle comes in, because excuse me, I did some long-term analysis, and I remember there's one trend line at the top, but I need to go back to that long-term analysis and look at those trend lines. So those long-term analysis, they work as well. They help you. They make the trades work. You know, all this sell-off is not just occurring just because nothing is happening. In fact, let's look at the New Zealand dollar on a naked chart and see exactly what's happening over there. And that would be my last, because I know there's one particular trading opportunity coming up, and that would be my last analysis for the weekend. Okay, so I'm gonna block all this and block all that, and possibly, right, I think this is what I want to look at. Right, so it's there exactly. Yeah, I was looking at this bat pattern, whatever pattern. Okay, it was a bad pattern that fails. I mean, that it was a bad pattern that take off the trend. This longer term trend line that I'm talking about, I can't remember. Yeah, that's the trend line. And you can see that it's easy to remember when you know, when you've done it one too many times. That trend line is one thing that I wanted to check. No, it won't be this one, this on hourly charts. Probably it's getting better now. So back on daily. All right, let me delete every single thing now. This analysis I've played out. I think I was looking at one particular trend line. It won't be all this one anyway. I want to see where the trends start to fall from. Okay, so yeah, then I know most probably I broke it down to this. Right, and I guess that is the trend line. Yeah, because I know aside coming from a very big time frame, keep breaking it down. And if you didn't see that, this is exactly what I did. I started, let me delete it again. All right, so for all the new traders, you go, or people who are just joining, you go on your longer time frame sometimes, right? And even when you draw the trend line from here to here, this is going to be the last analysis that I'm going to do. You can see we have this huge touch that send the price all the way down. We have another touch here that send the price all the way down. The third one that send the price all the way down. Okay, not a problem. But where is the current price? Okay. So quickly, I'll look at monthly. I want to consolidate my idea. Right, so on this monthly chart, what we can see is we can see that we have that excess, we have the balance, right? And price is breaking down to the downside on the monthly chart again as well, all right? That's just naked price. We haven't put any indicators, how far we can go. We can still come all the way down to here. Do I see any important structure? Well, the only structure that I can see was this particular one for now, that touch, and the third one is breaking it all the way down. We broke it before we test it. Now we are breaking it all the way back down again. Do we have any other thing again? Probably that. So price move from here, touch that, come back to here, touch this, come back to here. Now, does it mean we are seeing a much more bigger, clearer picture coming back to this area? There's a possibility, who knows? So you see it like that on the monthly time frame, and you are looking at yourself as a big time seller in this market. The same thing on the weekly time frame. But even if you now say to yourself that I'm a seller on the monthly time frame, if the weekly is not confirming you to be a seller, there's no way you can sell anything. If you sell that, you are just selling suicide. You know, it's just more or less like a suicide mission. And I believe Buki pointed that out. So that would be the weekly trend line. That would be a weekly trend line. And sometimes I like to just color my monthly differently. This is always my monthly color for me personally. Yours might be different, but I learned this from my mentor, and I like it, so I start to use it. It kind of gave me a distinct view of things that, oh, so I'll know that we are hitting the weekly trend line. And then I'll go to the daily now, okay? And in my daily, I'll be seeing something entirely else. So I know that the weekly move is coming down like that, but the daily move is showing me that we are doing this. And if we're doing this, and I like my daily to be that, if we're doing this, I'll be looking at this high and low area like that. So I know that in my daily time frame, we've crossed the monthly area, we've broken the daily area down. When I see this move, that first touch, that second touch, right, and we're breaking it down, I have every reason to start looking at every possibility that price can break itself all the way down there. But the first target now will be us taking out this area of low. That's where we are coming to. All right. So having said that, all this area as well, this is a daily chart, you know, I'm seeing some weak over here as well. This is telling me that some traders come in to buy this, they come in to buy this, you know. So there's possibility that we can see traders coming in and pushing up the buy. But how did the weekly close as well? The weekly close so bearish. So if I say close your eyes and think of where the price is going to go next week, everybody will be looking at price going to the downside. But will some of us be able to look at price going to the up as well? Of course, because of all this week. Price may eventually want to first come and test all those 4 hours resistance, which is one thing that I've mentioned again today that can happen in the market before the huge sell-off, although we've broken this structure. That is the key thing. But let's look at it on 4-hour candle. So looking at the 4-hour chart, you can see impulse correction, impulse correction, impulse correction, now impulse, okay? So that impulse can give us that correction, and that correction can end at those support and resistance for 4 hours. So this area of support can play a huge role. This area of support can play another huge role, okay? So you know that by the time that the price is pushing itself back to this area, I like to have about 3 areas or so above. Even if price is pushing itself back to this area, I know that now I have 3 levels where I can be considering sell off, right? We can sell off from there, we can sell off from there, we can sell off from there. You know, there's nothing wrong in us, right? There's nothing wrong in us having sell off from all this location. Okay, the next thing is I haven't considered any other thing. I'm just playing with my structure and I'm looking at that. Okay, such that if price tend to give us a move that we don't understand, look at the way we close that 4 hour. That 4 hour close not with continuation. That 4 hour close with a bit of a balance, a whole 4 hour, you know, and then that means we can start to see price pushing up to all this area and then possible continuation to the downside. All right. So I need to see that for our either the dynamic resistance or for our the static resistance failure. Okay. So maybe if I now bring this up now, I can see that my 36 is far away. I can see that my 200 is far away. Okay, which is not a bad one. Let's look at the 1 hour. The first quick one will now be my 1 hour. So I can see that I can have a trade around this 1 hour retracement, sell off, continue to the downside, or come down to all this area, sell off, continue to the downside. So I'm pinpointing those areas now. So what I'm basically looking for after that impulsive move is that correction. That correction can go to any extent. So, and then what I'll be looking for is a possible strategy high and low, you know, and then the key areas now are where I found 2, which is likely going to be that area. If price gets there, I'll be looking for an opportunity to sell. If price gets there, I'll be looking for an opportunity to sell. But yeah, aside from that now, I can see that the price is going down. The only thing that I need to sell now is for us to come back to any of this area for me to be a seller. Then I'll look at this structure as well. So having a look at this structure, one thing I'll see clearly is this. I'll see that we are bouncing off over here and then we can still come back to the eye of this place, and this area now is becoming my ultimate place to look for a short. If I don't take it from there, I'll be taking it from here and I'll be looking at this particular one, right? And I'll be looking at price coming back to this area for an opportunity to sell this again. But yeah, now I have all my sell zone well labeled and I'll be looking for that kind of trading opportunity. And say, for example, if I'm not in the market and I see something like this, by the time I come back, that bit of, what's it called? This bit of bearishness coming in, I know that that's an opportunity for me to sell. But for now, we are looking for this correction, and this correction, we are looking for it to stop somewhere where the 4 hours areas are, which can be all these areas, right? All these high areas for us to take a sell, you know. So pay attention to that and let's continue to follow it. And if we see that sell, we'll be looking for an opportunity to take that sell to come down all the way down to, say, somewhere from here. We see have that opportunity about 134 pips, you know, to this area for 39 pips. So almost 3 to 1 worth of a trading opportunity over there. Yeah, so I wish us the best of trading moments. I'm going to take a break now. I'm getting a little bit dried up. Thank you everyone for joining. I do appreciate your time. The one key thing that I want to say is, yeah, if you like what we do and you want to continue to support the class, I mean, we have some payment details over here where you can continue to support what we have, you know, and that will give us the strength to continue to go. We'll be able to pay for the software without breaking our own sweat. And then I hope you have a very good day. And for all the students on the mentoring, please, we're gonna have some class today, and then we're gonna take it from there. Zach, thank you for joining in. If you have any question, if you have any chats, start posting those chats into the chat room. We'll be looking at trades opportunity from there. I want to quickly look at what Mo did on this one. So Mo is looking for just a 1 hour chart, and there's a particular, I think this is a Gatly, you know, and this Gatly is looking at it to actually take off and start pushing itself into this direction as well. So as we are looking for correction to the upside, there's a Gatly pattern over there as well. So you can now see that a couple of things is matching up together, whereby we're not going to first of all look for a continuous selling opportunity. We will first of all look for that retracement, especially the 4 hour retracement, and then obviously we then take that opportunity to take advantage of price after such retracement. It's always good to wait for the retracement. All right, I think this is what Mo is saying. Let's have a look. Comes in also different forms. So it's looking at the 1 hour one. There is chart here as well. Let's see what this is. So there's more or less like a cipher pattern coming up. And that cipher pattern usually ends at 78.6. There's a cipher pattern coming up on a bigger level into 78.6. Overall, one needs to be very careful. The reason why one needs to be very careful of these prices is once this structure is invalidated, right? This is a key structure. First touch, second touch, the third touch failed. We try the fifth one, fails at the same time as well. You can email me, you can message me privately. Currently, it's about basically £97 per month for the students on mentoring. Some people book a bulk 3 month pricing of about £247. And it's intensive because you're going to be getting assignment and you have to be giving me feedback, and then you have to be showing me the trades, and then we have to be trading together sometimes. And then, yeah, but that's what the mentoring is about. So, yeah, it's not a big deal, but I'll be able to give you extensive tool, and obviously I'll be able to show you some market profile trading opportunity, give you the tool as well. You'll be able to take that, and yeah, you know, some days can be very challenging, but we'll still be able to find that trade that will that will give us that profit that we need at the back of the market. Sometimes we might be there from morning and the trade might not even come in until around 5, 6 o'clock in the evening. And there would have been an indication on the market profile that would have shown us that that kind of a day is what we are experiencing. But if that's the day that we are doing the mentoring, we just have to be patient for the opportunity. So this structure is what I'm looking at, that touch, and the break of it now, you know. There's no any EMA at this bottom over here, but is there any? Yeah, I think there are some daily areas over there that I say we need to be careful of. What's of all these weeks? Right, okay. All these buying strength that's coming in this area, they've bought there before. There's a significant week over there, so price can still push a little bit much higher up. But overall, yeah, we have a bearish move, and that bearish move for us to take advantage of it. It might not start immediately selling off. Price might push back up again because we've seen the beginning of the correction coming in on this 4-hour chart. This has shown us that the price is trying to balance until if we break this down now, then we can say that, okay, I'm just going to be a seller immediately. But I think it's always good to be patient. And the next key trade can be this key location, this 5 minutes, 200 EMA. So price can push up as much as into the 5 minute 200 EMA, right? And in that area, the sell-off can begin. But obviously, you have to tie that with another thing. You might be tying that and be looking at this particular move, saying, okay, 5 minute EMA is coming in at 38.2. Look at the then 38.2, you have the 70.70 over there, a much more bigger confluence, and then you have the 78.6 over here. So in all this area, once you start to see price coming up to this area, right, then it might be looking so good for you to start considering a short. So I might not want to, if I'm going to be placing a sell limit, I will be placing my sell limit closer to this area of the price against the New Zealand against the dollar. In that area, at least I know I'm getting closer to structure, which is that structure over there. If price push up and get closer to this structure, even if it try to break it up a little bit, I'm still gonna have the 633 that's coming closer, you know, and at that point in time, you have overbought scenario. So when you come to think about it, and this is what we're talking about, looking at things strategically, we have overbought scenario that's going to have a huge sell-off. Maybe you may want to say to yourself that trend line combined with the 633 EMA overbought sell-off is a good trading strategy for you. At least you know there's one thing that you are doing more than anything else is you are taking the trade when the price has already shown you a sign of overbought. You know, over here, price comes to that overbought level, the sell-off. In some places, it comes to the 200 sell-off, you know. So now that we've shown ourselves that we are under a downtrend, each and every time that we are attaining closer to the 633 EMA, it's an opportunity for looking at the price as being overbought, you know, and then taking an opportunity to sell in that particular region. All right, so let's continue to look at our pricing. Let's continue to look at our charts. Let's continue to look at trading opportunity, and more opportunities will be coming up for us. In the meantime, I want to say thank you all. Thank you all my family and friends from Buki to Bolande, iPad. I don't know who that is, but to Jumai, to Olagide, to Olusegun, to Femi Oyetade, to Razak, to Taiwo. Have I met Taiwo before? I'm not sure. Tibian and Titilayo Wumi. I mean, thank you so much. All I request you to do is send your chat to the chat room. Anything that you are looking at before the market opens. You know, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 of us, 12 of us over here now. You know, everyone might be looking at different currency, they send it in, and then by the time we look at it, we do the analysis at the back of it, we pinpoint some important areas, and that can be a profitable opportunity for us in the coming week. All right. So I'm going to call it a day over here now. Thank you, guys.
Thank you. Bye.
No worries. I believe we have a recording of this. I'll try my best to upload it as well.
Thank you, brother.
No worries. Have a
Really
lovely
appreciate
day.
you.
No worries, man. Take care.
Bye.
Take care. And take care of the families too, guys. You're welcome.
Thank you.
Thank you.
Speak later.
Speak to you. Bye.